So good morning everyone. So in today class we will discuss about another important chapter for examination. So we go for having very good weightage in exam. Audit of different types of entities. So very important for examination. Audit of different types of entities. So in the day one of the auditing class we told that in entire auditing paper we are going to discuss only about the company audit. Now what about the rest of the audits? Sole proprietor audit, example we given here, sole trader, partnership firms, limited liability partnership firms, hotels, clubs, cinema theaters, educational institutions, hospitals, charitable institutions, hire purchase transactions, cooperative societies, trusts, government audit, NGOs, local bodies. So this chapter have greater weightage for examination. So let us focus on the some core concepts in this particular special types or different types of entities. Now wherever required I will do more focus for examination purpose, and I will highlight the important points so we can note down all important points wherever required. Now let us start with the government audit first. So in order to understand this government audit we need to understand some terminologies. Now what is the terminology I need to understand as far as the government audit is concerned? Government audit. So as far as the government audit is concerned, so we need to understand some of the terminologies. One terminology is consolidated fund of India or union. Second one, consolidated fund of state or union territory. As we are discussing about the government audit, we need to understand some important terminology so that we can easily understand the concept. So consolidated fund of India, consolidated fund of state. Now let me write down here for the easy understanding purpose. So the fund can be divided into two types: consolidated fund of India or union, consolidated fund of the state or union territory. Now as far as the state is concerned, governor of the particular state is having supreme authority over the state. Who is having supreme authority? Governor. As far as the India is concerned, the supreme authority will be held by President of India. If we understand the basic points, then rest of the chapter will be very easy. Right? Now, so for the purpose of the government audit chapter, we are learning some basic points. One is consolidated fund of India and consolidated fund of the state. Now in case of union territory there is no concept of governor. So hence here also president will come and take the charge. Because union territory does not have the status of the state, hence when the status of the state is not there, automatically governor will not be there in the union territory. Now, as far as the receipts are concerned, as far as the state is concerned, regarding the state government, all the funds will come to the consolidated fund of the state. As far as the central is concerned, central or India is concerned, all the funds will come to the consolidated fund of India. So we are going to have the collections, we are going to have the expenses. Here also we are going to have the collections and we are going to have expenses. Shall we proceed? Now, as far as the government audit is concerned, we are learning some basic points here. So in government audit, the basic points are, we need to audit the government enterprises, we need to audit the government companies here. So as far as the government enterprises and local authorities are concerned, local bodies are concerned, as far as the government corporations are concerned, government is going to maintain their funds in different accounts. The accounts are called as consolidated fund of the India as far as the entire India is concerned, consolidated fund of the state as far as the state is concerned. Now for entire India, the supreme authority is the President of India. For the state, the supreme authority is Governor. Wherever there is no state, again President will come and take the charge. Sir, why we are discussing all these points? Because we are going to discuss about the audit, government audit. So government audit means, what is the meaning of audit? Examination of books of accounts. Independent examination of books of accounts. What kind of organizations? Government organizations. Shall we proceed? Now, when as far as the government organizations are concerned, who is having the authority to do the audit? Means, now the authority to do the audit as far as the government organization is concerned is called Comptroller Auditor General of India. Comptroller Auditor General of India. CAG. Comptroller and Auditor General of India. So in case of government, who will do the audit? Comptroller and Auditor General of India. Now somebody has to appoint the C&AG, and C&AG is violating the rules and regulations, they have to remove the C&AG also. So C&AG authority is a natural person like you and me, is called C&AG officer. So for examination purpose, because we are doing the revision classes, for examination purpose, let us quickly revise as for the institute material. So in case of the government, all government expenditures will be spent only when the bill is passed in the parliament, right? So, or state legislatures, and the funds of the every such expenditure must be provided from consolidated fund of India or consolidated fund of the state. All state government incomes will go to where? Consolidated fund of the state. All government of India incomes will go to which account? Consolidated fund of India. If anybody want to take any of the rupee from that account, then there should be a voting concept either in the legislature or in the parliament. Now we need to understand very important for examination. So we are discussing about only important concepts. Appointment and removal of C&AG auditors. Who can appoint the C&AG auditor and who can remove the C&AG auditor, and mark it as very important for examination. So we are discussing about from the institute material. We already given majority of the points in the classroom book as well, but please write down the notes so that you will be having a rich experience for examination. So appointment of C&AG auditor and removal of C&AG auditors. So who can do the audit in case of government companies? C&AG can do the audit in case of government companies. Then who can appoint the C&AG auditor and who can remove the C&AG auditor is the subject matter of discussion. Shall we proceed? Good. Now, C&AG auditor shall, they use the word shall, means mandatorily appointed by the President of India. Appointed by President of India. Who will appoint C&AG auditor? President of India will appoint the C&AG auditor. Who will appoint? President of India will appoint the C&AG auditor. Shall we proceed? Now always please remember, appointment of auditor is always easy process, but removal of auditor is always difficult process. Example, getting married is very easy, getting divorce is difficult. Exactly similar lines here also. Not only in this particular chapter, including company audit chapter. Now the company audit chapter shifted from auditing paper to law paper. There also there is a company auditor appointment. Appointment auditor is very, very easy. When you want to go for removal of the auditor, that means one of the person who is a qualified professional you are removing. So what is the reason for removal? You need to prove that misbehavior also, why you are removing the auditor. Now based on this, now please note important point for examination. Who will appoint the C&AG auditor? President of India will appoint the C&AG auditor. They may give the ABCD options and they may test in examination. Now listen very carefully. And shall not be removed from the office. Which office? C&AG office. Which office? C&AG office. Except on the ground of proven misbehavior or incapacity to act as a C&AG auditor. Now let me give the example for this. Now this person appointed as a C&AG auditor. Let us assume his name is Mr. R. Okay. He is having the power to do the government audits, right? Now there may be a possibility that he is indulged or involved in some fraud in the government companies. Let us take an example. Somebody filed a case against this auditor that is involved in the fraud. Can we remove the C&AG auditor now? Somebody filed a case, or shareholders or third parties or vendors of the company filed a case against Mr. R, who is C&AG auditor. Okay. For what reason? He is involved in some kind of frauds in the government companies. Sir, there is no real expenditure, but he is given the approval or he is colluded with the government staff and he has committed a fraud. Somebody filed a case. Somebody filed a case against whom? C&AG auditor. Now, can we remove the C&AG auditor now? Filing of the case itself will not lead to the removal. Important point to be noted here is, it must be proved in the court of law. It must be proved. If it is proved, then he can be removed. Not proved, not proved with the facts, not proved with the evidences, then he cannot remove. Very, very important for examination. So we are discussing in a conceptual manner. So instead of reading the theory, we need to understand in a conceptual way. So here grammar is very, very important, and each and every line is very, very important, each and every sentence is very important, each and every word is very, very important. Now one line summary of entire discussion. C&AG auditor shall be appointed by the President of India. C&AG auditors can be removed. Yes, they can be removed only when there is a proven misbehavior. Only there is a proven misbehavior. Only in two situations I can remove the C&AG auditor. So two situations are as follows. One is proven misbehavior. Number two is incapacity to act as a C&AG auditor. So what is the meaning of incapacity, sir? Let us take an example. I appointed a C&AG auditor. C&AG auditor got lunatic. He got mental. Right? Can he continue in the post? He is psychologically has gone into depression. Can he continue in the post? He cannot continue, sir, because it is a prestigious post given by the government of India and President of India. Hence, in case the moment he is incapacitated to act as a C&AG auditor, he can be removed from the post. I have not yet told who can remove the C&AG auditor. I have told so far only under what circumstances C&AG auditor can be removed. Only in two circumstances C&AG auditor can be removed. One circumstance is very, very important for examination. Proven misbehavior. Proven. If anybody filing a case against a C&AG auditor, they have to prove it evidences. They have to prove it real facts. Otherwise, auditor cannot be removed. Shall I proceed? No. Makes sense? Very important for examination. Shall we? No. Now let us continue with the explanation. Now see, there is only two lines we have read so far, and see the background of explanation. So these were the importance in auditing paper. There are some chapters where we need more focus, and this is more important for exam also. Now that's the reason I am not going to read out the entire chapter. So we will read out wherever important for examination. We will go in depth and learn, so that we can give the good attempt in examination to score good marks in exam as well. Shall we? No. In the case of Judge of Supreme Court, sir, why Judge of Supreme Court coming into picture? There is a interrelation between the C&AG auditor and the Judge of Supreme Court here. Tell me, my dear friends, Judge of Supreme Court has to act independently or dependently? Whenever he is giving a judgment, he has to give independently. Yes or no? He cannot give the judgment on his own. He cannot give the judgments with the wishes and directions of somebody. Yes or no? Based on the evidences available, based on the facts available, based on the explanation given in the court, based on the arguments between the both advocates, finally judge has to give the appropriate judgment to the respective parties. Yes or no? Now we are interlinking the C&AG auditor with whom? Which judge? Repeat. Repeat. Supreme Court, Supreme Court, Supreme Court, Supreme Court judge. Supreme authority in India. Right? Examination question, they may be tested. C&AG auditor will have the equal rights as a judge of High Court of Haryana. True or false? False. I am not comparing the C&AG auditor with the judge of the High Courts. I am comparing the judge of the Supreme Court. Sir, why you are comparing the judge of Supreme Court, sir? So, When Supreme Court judge can be removed in case of misconduct or misbehavior. In the similar lines and similar way, I will remove the C&AG auditor also. Shall we proceed? Now listen. He can be removed only when each house of the parliament. What is the meaning of each house of the parliament? Lok Sabha and Rajya Sabha. Each house of the parliament, Lok Sabha and Rajya Sabha, decides to do so by a majority of not less than 2/3 of the members of the house in the present and vote. So both Lok Sabha, how many members has to vote? Whoever presented, they have to give the voting. 2/3 of the members has to take a decision to remove the Supreme Court judge. 2/3 of the Rajya Sabha members present in the Rajya Sabha has to vote in the favor of removal of Supreme Court judge. In case of Supreme Court judge removal. Same concept applicable to C&AG auditor also. I given supreme powers like judge of the Supreme Court to the C&AG auditor. C&AG auditor can go for the inspection of the, and he is having a lot of rights and responsibilities as we are going to discuss further. Now for time being, whenever Supreme Court judge will be removed, in the similar lines, C&AG auditor also will be removed. So what is the condition? 2/3 of the Lok Sabha members has to vote in the favor of removal and 2/3 of the Rajya Sabha members has to vote in the favor of removal. Now tell me, my dear friends, somebody filed a case against Supreme Court judge, and in our concept, C&AG auditor, 2/3 of the members of the Rajya Sabha has cast a vote in the favor of removal. 2/3 of the members of Lok Sabha also cast a vote in the favor of removal. Can he will be removed or will not be removed? Both are voted. Yes sir, I am voting. Yes, done, remove. I am voting. Yes, done, remove. I am voting. Yes, done, remove. I got the votes. Here also I got the 2/3 of the votes. Here also I got the 2/3 of the votes. Now tell me, can C&AG auditor removed or cannot be removed? Voting done, right? 2/3 of the members voted in the favor of removal. Again, point to be noted here is just now we discussed. His misbehavior should be proved, then only you can remove, not because of merely by voting. Because you are removing the highly qualified professional, highly knowledgeable professional, highly skillful professional. Merely because of the voting by the Lok Sabha and Rajya Sabha, you cannot remove the person. Very, very important for examination. Case study based question. When he can be removed? When the misbehavior is proved, then he can be removed, not because of the voting. That means voting should be completed and 2/3 of the voting should be done, and also misbehavior should be proved. In the both should be satisfied in order for removal. Shall we? He cannot be removed. He cannot be removed. See, when the moment misbehavior is proved, automatically everyone will vote. See, once misbehavior is proved in the court of law, automatically the person sitting in the Rajya Sabha and Lok Sabha has to act in the interest of the country, not because of the interest of the person. Definitely they will vote for the removal. Otherwise, strikes, dharna, so lot of things will happen. Shall we? So examination question, how they will be tested is, the twist of the question might be, they give the question like this: C&AG auditor has they decided to go for removal. 2/3 of the members present in the Rajya Sabha has voted in favor for the removal. 2/3 of the members of the Lok Sabha also voted in the favor of the removal. But misbehavior is yet to be proved. Can he removed from the post of C&AG auditor or not? No. Answer is no. Why? Misbehavior yet not yet proved. Shall we proceed? These are the complicated questions from this particular para what they are asking regularly for examination. With whom we are comparing the C&AG auditor? Super. One more examination question. Now listen. Sir, when I am comparing the Supreme Court judge, right, as far as C&AG auditor is concerned, the government has taken a decision, C&AG auditor should get a salary equivalent to Supreme Court judge. C&AG auditor should get salary equivalent to Supreme Court judge. One more examination question. The Parliament is competent to make a law to determine the salary and other conditions of the service. Service means period of C&AG auditor. How many years he can be in the service. And they cannot be varied to his disadvantage after his appointment. So his salary, everything will be given equivalent to Supreme Court judge. But please understand, my dear friends, they given the word, this cannot be varied to his disadvantage after his appointment. Example, government appointed a C&AG auditor. Supreme Court judge salary is 5 lakh rupee per month. Let us take an example. But C&AG auditor is given a 2 lakh rupee per month because he belongs to some other party or some other religion like that. Can we do so? What they given? It cannot be varied to his disadvantage. Give respect to his qualification. Give respect to his rich experience. Give respect to the post whatever you are appointing, not to the person. So examination question is, so what is the maximum salary C&AG auditor can get? Salary equivalent to High Court judge, salary equivalent to Supreme Court judge, salary equivalent to Judicial Court judge, like that they will give the options. So we need to pick up the right answer is salary equivalent to Supreme Court judge. Shall we? So this is the appointment and removal of C&AG auditors. Mark it as very, very important for examination. So this entire para is very, very important. So already is given here. So the salary will be paid which is equivalent to the salary of Supreme Court judge, thereby strengthening his independence. So C&AG auditor, Comptroller Auditor General of India will be paid a salary equivalent to Supreme Court judge. Now let us go for the another important area of discussion, government audit. As we said, we are not going to discuss all the areas of the government audit. Whatever important for examination, we go for the important concepts in this particular chapter. Another important concept for examination, propriety audit. What audit? Propriety audit. Which audit? Propriety audit. The concept is very simple. Let me give the explanation for this. Now tell me, my dear friends, in case of the government expenditure, government officers will be given the ultimate authority to sign the check or not. They will sign the check. Now tell me, my dear friends, Will all government officers are only Hindus? They are not Hindu. Will all government officers are only Christian? No. Will all government officers are only Muslim? No. There may be mixture of officers, right? Yes or no? United India, right? So we don't have religious feelings as far as the government organizations are concerned. We should not show the religious feelings when you are in the government service. Yes or no? Now tell me, when you are constructing your house, let us take an example. You are a government officer, okay? You are constructing your own house. Now tell me, when you are constructing your own house, whatever the labor charges you will pay, and whatever the material charges we will pay, and whatever the furniture you are going to buy, and whatever the expenses you are going to meet, what are the fixed assets you are going to build in, will be each and every rupee will be bargained or you will pay as it is. Example, labor said, sir, give me 10 lakhs. You will give 10 lakhs or will bargain? Bargain. Material cost. The concerned material company has told that, sir, material cost will be around 50 lakh rupees. Will you pay entire 50 lakh rupees or you go for bargain? Why you are bargaining? Why you are bargaining when you are constructing your own house? Only reason is I am paying everything out of my pocket. And my intention is to save. Yes or no? Once you understand this particular concept, proprietary audit is very easy. So proprietary audit concept says the government officers who are working in the concerned government department has to spend each and every rupee of the government incomes and government expenses as if it is their own money is called proprietary audit. Shall we proceed? Whenever you are spending, carefully you should spend, because it is not your money first of all. That too you are taking government salary every month and you are enjoying all government benefits. Then you have to do all activities in the favor of the government. Shall we? And whenever there is no requirement, don't spend. Whenever there is a requirement, spend cautiously. Prepare a budget and spend. And whenever you need some big asset, plant and machinery like kind of things, example 5 crore rupees, will you go and blindly pay 5 crores to one vendor? You will go for various vendor verifications or inquiries. Then whom we are going to select finally? Whoever give the lowest amount, we are going to go for that, subject to quality controls. Yes or no? So if auditor is going to do such kind of verification, this is called as proprietary audit. Shall we? Now let us see how we should present in examination. As per proprietary audit, the auditors try to bring out the cases of situations of improper expenditure. What expenses, sir? Improper expenses. Where? In case of government organizations, the auditor is going to ensure avoidable expenses. Sir, here it is not required to spend. Why you are spending, sir, unnecessarily? You are wasting the government money, sir. Ineffective expenditure. Sir, you are constructing public toilets. No one is using it, sir. Ineffective, sir. Whenever you are spending some money, it should be effectively used by everyone, sir. Shall I proceed? Now, the audit will be carried out by the C&AG auditors to bring out the cases of improper, avoidable, ineffective expenditure, even though the expenditure has been incurred in conformity with the existing rules and regulations. Sir, I completely agree with you, sir. You have spent all the money as per the bylaws. You have spent all the money as per rules and regulations. You have spent all the money as per the conditions given. But please tell me whether this expenses is useful or wasteful. proper or improper, avoidable or not avoidable, effective or ineffective. I want answer for that. If auditor is doing with this kind of mindset, this audit is called as what audit? Propriety audit. Now continue with the let us take an example. Shall we go for example? A government building may be constructed for installing a telephone exchange. They constructed a what? A building. Purpose? To have a telephone exchange. But may not be used for the same purpose, resulting in what? Unproductive expenditure. Yes or no? Sir, you have constructed the government building with bylaws. I agree with you. You constructed the government building with rules and regulations of the government, but no use, sir. I want to bring action against somebody. Those officers who spend this money, I want to take action against them. Second example. School building may be constructed. You have spent lot of money. From where you are taking all the money? Consolidated Fund of India and Consolidated Fund of State. And we given the permission to construct a beautiful school, Gurukul Patashala. But what you have done, sir? But used after 5 years of its completion. Any problem with the ruling government, sir? Then why you are spend the money, why you are locked the government money for 5 years? The moment building is completed, inaugurate the building and ask the students to come to the Gurukul Patashala and run the schools and colleges. Then you have wasted the government income for the 5 years period. It is properly constructed as per the bylaws. Still, we don't agree for this because of 3 reasons. What are 3 reasons? Improper, avoidable, ineffective. Now the building is not used for 5 years, ineffective. Shall we proceed? So this can be avoidable for 5 years, right? Why you are constructed 5 years earlier? Maybe my intention is you given the contract to your related parties to construct the building. Yes or no? That's what the doubt of the auditor. Sir, for construction of the school building, you have paid 10 crores, sir. Who is the contractor? At that point of time, in that particular district, you are the IAS officer relative may be your relative. The contractor may be your relative. Hence, you have taken up the assignment and constructed the building. You have paid 10 crores also. Everything paid as per the bylaws, but not useful, sir. This kind of audit is called as propriety audit. Now, let us continue. Now, auditors should therefore try to secure a reasonably high standard of public financial morality by looking into the wisdom, faithfulness and economy of the transactions. With what kind of mindset the officers are spending money, auditor has to check. What kind of decisions officers have taken, auditor has to check. In case of your own house construction, what kind of precautions you have taken, sir? For each and every rupee you are bargaining. And whenever they are quoting higher amount, you are going to some other shop and you are buying the raw materials. But why you are wasting the government money in case of the public enterprises? Now, auditor should be very, very focused, and auditor should do the proprietary audit to ensure that the wisdom, faithfulness and economy of the transactions. Now, proprietary audit, auditor has to check the following points. Important for examination. You need to write these points in examination. Whatever I am highlighting, you need to quote in the examination. You can also highlight along with the faculty, and you can also highlight in your books also. Now, this is what you need to write down in the examination. In case of audit of the proprietary, auditor seeks to ensure that expenses conforms to the principles which have been stated as follows. Proprietary audit principle number 1. Whenever auditor is doing proprietary audit, auditor should ensure that expenditure, inflow or outflow, from where? Consolidated fund of India in case of union, or consolidated fund of the state in case of the state government. The expenditure should not be prima facie more than the occasion demands. Occasion demands, example, you are conducting some government program. Prime Minister of India is visiting some place, or Chief Minister of a particular state is visiting some place, or district collector meeting is going on. Occasion demands to spend 5 lakh rupees, but you should not spend more than 5 lakhs. Merely because all IAS officers are coming, you cannot spend 10 lakh rupees instead of 5 lakh rupees. Merely because Prime Minister of India is coming, you cannot spend 1 crore rupee. Shall we proceed? Why? Because you need to ensure wisdom, faithfulness, economy of the transactions. Economic decisions you need to take. Financial decisions you should take. Shall we proceed? What is the principle number 1, sir? In case of proprietary audit, expenditure should not be more than the occasion demands. Whatever the occasion the government is conducting, you spend the amount as per the rules. We don't have any problem, but you should not spend more than the required occasion. Now in this case, now read this point. How to ensure this one? How to ensure you should not spend more than occasion demands? Come to the house construction of the particular officer. He may be having budget or he may not be having budget. In case of a government officer constructing a house, he may be having budget or he may not have budget. Every government officer or a normal person or any person will have a budget for the house construction. Example, he is having a house budget of 50 lakh rupees. Will he go beyond 50 lakhs or less than 50 lakhs? He will always plan to reach the 50 lakhs or come down below 50 lakh rupees. Yes or no? When he can do so? For each and every expenditure, he has to spend cautiously and he has to bargain, he has to negotiate, then only expenditure will come down. In case of the government organizations also, the respective officer has to do the same rule. Now read this point. Every public officer, is expected to exercise the same vigilance, same caution in respect of expenditure income from public money as a person of ordinary prudence. What is the meaning of ordinary prudence? As if it is your own money. Would exercise in respect of expenditure of his own money. How an ordinary person will spend the money, exactly similar lines, government officer also should think and he has to spend the money. So this is the principle number 1 in case of the proprietary audit. What is principle number 1? Don't spend more than occasion demands. How to ensure that? Spend as if it is your own money, then you can save the money. Shall we proceed? Principle number 2. No authority. What is the meaning of no authority? No person should exercise its powers of sanctioning expenditure. Example, I am a governor of particular state. Do I have authority or not? I have the authority. Can I sign some 10 crore rupee check for my village development? Can a governor of the particular state, can a sign 10 crore check for the development of his own village? 10 crores, 100 crores, 1000 crores. Why? Sir, when you are a governor, you have to give the equal importance to all the respective districts and respective places. Yes or no? Shall we proceed? Now look at the principle number 2, very important for examination. No person should exercise his powers of sanctioning expenditure to pass an order which will be directly or indirectly to his own advantage, own advantage, own advantage, own advantage. Whenever you spend money, it is for whose advantage? It should be public advantage. It should not be your own advantage. That is the principle number 2. What is the principle number 1, sir, in case of proprietary audit? Don't spend more than occasion demands. That's what auditor has to ensure. What is the principle number 2? Don't spend the money for your own advantage. Shall we proceed? Point number 3. Principle number 3. Whose money? Public money. Where you are depositing the public money? Which account? Consolidated Fund of India or Consolidated Fund of the state. Who is supreme authority for India? President. For the state? Governor. Shall we proceed? Now, public money should not be utilized for the benefit of a particular person or a section of community. Just now we told Hindu, Muslim, Christian, like that. There are a lot of communities here, religious here. Yes or no? You should not spend the money for your community. You should not spend the money for your personal purpose. Because whose money? Public money. To whom you should spend? Public purpose. Very simple concept. Shall we? Now, unless you can spend, no problem for us. When the amount of expenditure involved is insignificant. Example, I am the governor of the particular state. I want to spend some amount for my village. I want to construct the water plant. Can I do so or not? Water plant for my village. Governor of the state. Any problem? Laying of small road, repairs and maintenance. Can I do so or not? I can do so. But I cannot buy the 100 acres of land for my village people. With whose money? Public money. Because whenever you want to spend money from the Consolidated Fund of India, whenever you want to spend money from the Consolidated Fund of the state, who has to vote? Parliament bill should be passed. Shall we proceed? No. So, in case of significant amount, it can be ignored, or a claim for the amount would be enforced in the court of law. Example, national highways constructed by the NHAI, National Highway Authority of India. We have seen so many times. There are so many villages which have been demolished, all houses have been demolished, and they would lay down the national highway in between of the particular village. Should we pay more compensation or less compensation? Sir, I am living in my dream house for past 4 or 5 generations. Because of your national highway, I am voluntarily giving my house, and you are demolished it when I am seeing my house. Yes or no? And you are paying some amount to me, but I am not satisfied. All the village people filed a suit in the court of law. Court given a judgment, no problem. That entire community, whoever staying there, you pay so and so amount. At that particular point of time, I am signing. I am also belongs to same community. It is not a problem at all. Why? Because court of law is given a judgment. I have not taken over my own decision, sir. I may belong to the same community, but it is not my decision. Court has given the order. I am just signing the check. Shall we proceed? Principle number 4. The expenditure, from where you are spending expenditure? Consolidated Fund of India or Consolidated Fund of State, you are spending expenditure, is in pursuance of recognized policy or custom. If it is already approved by the government of India to spend, example, we are spending all for the Christmas expenses, government will spend money. Then they will spend money for Ranjan, and they will spend money for the New Year. Yes or no? That is a custom we are following, traditions we are following. For that purpose, we can spend the money. But remember the principle number 1. What is principle number 1? Don't spend more than occasion demands. Remember principle number 2. What is principle number 2? Don't spend for own advantage. Now, principle number 5, sir. Yeah. The amount of allowances such as traveling granted to the meet expenditure of a particular type should be regulated that the allowances are not on the whole source of profit to the recipient. Example, government allowed me to claim every month traveling expenses. I am acting as a district collector or a particular government officer. Let us take a high court judge. Yes or no? They told me to claim the expenses. My salary is 50,000 rupees per month, or let us take 1.5 lakh per month. 18 lakhs is my package, government salary. Government is allowed me to claim the expenses whatever I spend for the travel. Because I am district collector, I have to travel for so many places, or I have to travel for so many locations also. Every month I am giving a claim of 5 lakhs. Because I am a district collector, nobody will object, right? 5 lakhs every month. 5 into 12, 60 lakhs. I got the reimbursement of expenses. What is my main source of income now? My salary or reimbursement of expenses? My salary is 1.5 lakh per month. My reimbursement is 5 lakhs per month. Which is more? Reimbursement is more. Don't do that. The amount of allowances, government is paying allowance, dearness allowance, travel allowance, uniform allowance, then petrol allowance, then guest house allowance, then house rent allowance, then education allowance, then entertainment allowance, all they are paying. But don't overclaim it. Because whose money? Whose money? Public money. It is not your money, sir. So you should keep in mind, it is not your money. It is a public money. Shall we proceed? Now this should be ensured by the auditor. So these are the 3 principles, and in case of the proprietary audit. Shall we proceed? No. Now these are 2 important points as far as the government audit is concerned. Now we go for the reporting procedure. The day 1 class of auditing, we discussed about auditor should give a report to appointing authorities. Yes, no. Now your reporting authority is C&AG shall report on the accounts of the union and of each state to the president in case of the union, governor in case of the state. To whom C&AG should give the report? President in case of the union government, governor in case of the state government. Governor is head of what? State or union? State. President is head of union. So when C&AG auditor gives this report with respect to governor and respect to president, in turn the president will present these books of accounts and all the audit report in the parliament. In case of the governor, state legislature they will present. With that, audit will be complete. Now listen. He will present the audit report to the president in case of the union government and governor in case of the state government, and later shall it cause the report to be laid down before the legislatures. The report should not only be presented to the legislatures, but thereafter also publicized adequately in order to create proper climate of the public opinion for taking remedial action wherever necessary on the finding of the Auditor General. That means they have to place all the information in the C&AG website also. Now every company is placing, listed companies are all placing their audit reports in the respective website, right? Place there, or public may give the opinions. Now this is what government audit important points. And another important frequently tested question for examination. Audit of stores and inventories. another important question for examination. So I am not going to discuss about this, just I want to give the brief idea about the audit of stores inventory. Now government is procuring lot of inventory. Example, all government hospitals, yes or no? Medicines they are procuring. Now look at the all what is civil supplies. What is civil supplies means? Each and every district, on each and every panchayat there may be ration shops where they are supplying the rice and sugar and wheat, like that. Now government will buy and they will distribute, or buy and store and they will distribute. Regarding that, auditor should be very, very careful. There may be a possibility for misappropriation of these goods, the inventory held by the government organizations. Even the government has clearly set up different companies in India. Civil Supplies Corporation of India is separate. Yes or no? So like that, we have a lot of godowns also. We are storing the lot of rice for the future generation. We are storing lot of grains for the future generation. But still, when the C&AG audit is going on, when you spend money for purchase of this inventory, auditor should ensure that whether it has been properly purchased and paid the price as per the rules and regulations or not. That's what auditor should ensure. That's what the examination question. Let me briefly explain about this. Auditor should ascertain whether regulations governing purchases, receipts, issues and custody, sale, inventory taking of the stores are properly carried out. That means what? Internal control systems. I purchase the goods, then what should I do? Verify whether the quality goods have been purchased or not. Once purchased, I am going to receive the goods, yes or no? Once I receive the goods, I am going to store. Then I am going to issue the goods based on the requirement of the particular states. Then states in turn issue the respect of districts. Districts in turn issue respect to panchayat offices. Yes or no? Now issue. I should not issue the entire goods to my own village. Yes or no? Then custody. That means storage of the goods. Where should I store? Should I store in the area where there is a more possibility for cyclones, or should store in a place where there should not be any natural calamities will not happen? Where the place the natural calamity will not disturb the place, there I should go and store. Then sale. If I have excess inventory, I can sell to some other countries also, I can export also. Then inventory taking, that means physical counting of inventory. So whether inventory is really available or not available, you need to check. So the reason, whenever the old government has gone and new government is formed, they will go and verify first all the inventory first. We have seen in so many states also. When the state government is formed, the government immediately allocate the ministries, the respective ministry will go and verify the goods first, whether the goods are really available or not, because they have spent the money from the government. And government wine shops, liquor, beverages, so they are purchasing and they are storing and they are selling in the government wine shops. Now, auditors should bring out to the notice of the government if any deficiencies in the quantities. That means what? We bought 100 tons of rice. We issued 40 tons of rice. Then what is the closing stock? 60 tons. This is what purchase, issue, closing stock. But physical verification, that is only 40 tons. What is the shortage? 20 is the shortage. When the auditor has notice of this, immediately please bring it to notice of the government. Government purchased 100 tons of rice, issued 40 tons of rice. The closing stock should be 60 tons. When physically verified the closing stock, there is only 40 tons available. The shortage is 20 tons. This should be brought to the notice of the government for appropriate action and any defects in the system of the control. And to verify the purchases are properly sanctioned or not. I am purchasing 100 tons of rice. Whether it is been properly sanctioned or without sanction, you have gone and purchased the goods. Auditor should verify. If it is improper purchase, immediately take action against the respective officer. To ensure that the price paid are reasonable and are in agreement with the contract of the supply of the stores. I have entered into a contract with some vendor where regularly I am buying from the vendor. At what price you are buying, sir? I am buying at the 50 rupees per kg. Sir, why, sir, in the market available for 40 rupees? 40 is reasonable, 50 is reasonable. 40 rupees is reasonable, right? Then why you are buying at 50 rupees? This matter should be bring it to the notice of the government as far as the auditor is concerned. Then finally, auditor should check the accounts of the receipts, issues, balances, that means closing balances, regarding the accuracy, correctness and reasonableness of the balances in inventory with a particular reference to the specified norms of the levels of consumption of inventory holding. So what is the consumption required? What is the inventory really held in the respective godowns? Sir, we stored in this godown to issue to the particular public, sir, but ideally the stock is there, no one is taking the stock, sir. Useful or wasteful? Wasteful. No. Any excess or idle inventory is specifically mentioned in the report, and periodical verification inventory is also conducted to ensure their existence. When priced amount are maintained, auditor should see that the price charged are reasonable and have been reviewed from the time to time. Example, government said give the 2 rupees per kg rice. Okay, when the officers are selling it the 3 rupees. Government will fix the price for each and every product of the government items. Yes or no? For rice they will fix the price. For wine they will fix the price. For mine they will fix the price. Yes or no? For sand they will fix the price. Yes or no? You are selling at the right price or you are collecting excess amount, auditor should ensure. So this is the audit procedure for audit of stores and inventory. So many times it is tested for examination. Shall we? With this, government audit is completed. So we are covering major topics for examination. So please remember that. So we are discussing special types of entities. So first we discussed about the government audits. Now let us go for the audit of the partnership firms. Audit of partnership firms. So very easy concept for examination. Audit of partnership firm. So hereafter, for each and every entity, if you know the activities of the particular organization, audit will be completed. That means auditor should understand nature of business, right? Now tell me, my dear friends, partnership firm means how many persons? Minimum 2 persons. Very good. Okay. Number 1. Number 2. Now what they are going to do? Very good. They want to do business. In order to do business, what they have to introduce? Very good. Capital. Capital will be introduced at what ratio? Very good. Profit sharing ratio. So when they introduce the capital, will they expect any return on capital or don't expect? What is that called? Very good. Interest on capital. Now out of the 2 partners, for the daily they are coming to the office and they are executing the work, will they take any remuneration or free of cost? Will they take or will not take? Will take. We call it as what? Remuneration of partners. Business is expanding day to day basis. Already 4 years is over, 5 years is over. So I wanted to get more and more funds, but I don't want to convert it into private limited account. I want to be partnership firm only. but so many persons are coming and approaching me, sir, I want to admit as a partner, then what should I do now? What should I do? Admission of a partners. Due to the age issue or due to the ego clashes or due to the some personal domestic problems, partners may want to go out of the firm. So what it called as retirement of partners. Yes or no? Very good. Now for all the partnership business activities, what they have to maintain? Very good. Books of account they have to maintain. So will the books of account to be audited, should not be audited? Very good. Audit clause. Who has to audit? By chartered accountant. Shall we proceed? So we are understanding the business structure. Okay, if you understand the activities of the business, then same points we are going to repeat in examination. Now what you are going to write? Auditor should check the number of partners. Auditor should check the objective of the business and whether the same objective have been carried out or not. Auditor should check the capital class of the partners to ensure whether the proper capital have been introduced or not. Then auditor should ensure the profit sharing ratio to divide the profits on the profit sharing ratio. Then auditor should ensure the interest on capital you should not go beyond the 12% as per the partnership deed. Auditor should ensure the remuneration of paid to the partners. It should be within the income tax limit. Then auditor should ensure the admission of a partner. Whenever partner is admitted, admitted partner may bring the capital or firm may call the goodwill also. So hence one more point, goodwill point. Shall we? No. Now partners don't want to carry out the business. Enough is enough. We have done a mistake. We want to close the business. What should I do now? Dissolution of firm. Okay. Shall we proceed? No. In order to carry out the day-to-day activities in the banking channel, what should I do? Open a bank account in the name of the firm. Who has to operate the bank account? All the partners. There are 20 partners. 20 partners will go and operate, or they will give authorization to only one person. Very good. Who has to operate the account? I want to get the funds from the bankers. What should I do now? I want to expand my business. I want money. So I want to go for the bank loans. So what should I do now? Go and approach the banker. Who has to sign the loan document? Only one partner, all the partners. So where you are going to write all these points? In the deed. Loans and advances. There is a dispute among the partners. What they will do? How they are going to resolve? Arbitration clause. Okay. So naturally we are discussing all the points. If auditor examine all these points, partnership audit is over. Easy or difficult? Very, very easy. Auditor examine all these points, partnership audit is over. Now for which audit, what auditor has to do? Understand the nature of business. Now tell me, my dear friends, how to understand the nature of business? Read the partnership deed. Number 2, read the minutes of the meetings of the partners. Yes sir. Shall we? Now let us see the how we are going to present in the examination. Matters to be considered by the partner. Matters to be considered by the auditor before starting of the audit. What are the matters to be considered? We have discussed about so many points so far. where I am going to read all these points. Very good. So before starting of the audit, auditor should examine the partnership agreement or partnership deed, and he has to note on the following matters. So deed contains what? Name of the firm it contains, duration of the firm, whether it is for 1 year or 5 years or at will. Whenever I want to close, I will close the firm. I am not going to specifically write down the period where it is going to be given. Partnership deed, then capital, then period at the end of which accounts are to be closed. When accounts are to be closed? End of the year, that means April to March. Then books of accounts, then borrowings, then interest rate, salary payable to partners, duties of the partners. When I am paying salary, for what I am paying salary? To execute your duties. What is your duty? There are 5 partners. All 5 partners will do the same work or different works. Where I am going to mention partnership agreement copy, I am going to mention. Who operates the bank account of the firm? As per the deed, you should operate the bank account. Auditor is going to check all these points. Limitation and restrictions, if any. So these partners should not do this work, this partner should do this work, like that. There is a limitation restriction I have to follow. Partnership deed may having a clause that partnership firm should not go for a bank loan beyond 10 lakh rupees. Restriction. This auditor should check. No. If auditor verify all these points, partnership audit is over. Easy or difficult? Naturally, direct classroom to exam. No need to go home and prepare again. Because partnership firm, minimum 2 partners, they are going to start a business. Business should be legal business. In order to carry out the business, there should be capital to be introduced. When capital is introduced, the partner is going to pay interest on capital. Then they have to maintain the books of accounts. Then they have to go for the bank account opening and operate the bank account. For the further expansion of the business, they have to go for the bank loans. And loan should be as per the partnership deed. Now there may be a duties of the partners, rights of the partners, then books of accounts should be closed for every financial year. Like that, we need to check each and every point. We discussed extra points also. Arbitration clause is not there, admission retirement is not there. Now tell me, audit of partnership firms as per Partnership Act is not mandatory. Examination question. Audit of partnership firms as per Partnership Act is not mandatory. Sir, then why audit we are doing, sir? It may be mandatory as per Income Tax Act. You are going for income tax audit, not audit of the firm as per Partnership Act. Yes or no? If the partnership firm is involved in some import-export, you may be going for import-export audit. Yes or no? But partnership firm need not get it audit of the books of accounts as per the Partnership Act. Shall we proceed? In India, one more point to be noted. In India, partnership firms can do the business without registration certificate. One more examination question. Sir, what do you mean to say? Can I write down the deed, apply for the PAN card, open the bank account? Can I do the business? Yes. Registration of the partnership firm with the register of firms is optional as per Partnership Act. One more examination question. But comparing with the companies, without getting incorporation certificate from the Ministry of Corporate Affairs, you cannot start the business. In case of company. In case of firm, certificate itself not required, sir. Then what is the instrument you have? Partnership deed is the instrument. Where you can check the terms and conditions? Partnership deed itself we can check the terms and conditions. Yes or no? No. Now tell me, normally lot of partnership firms will appoint the auditors for getting their books of accounts audited by chartered accountant. Example, there are 4 friends. They are entering into a partnership firm and they are constructing the villas or apartments or some individual houses. All four partners have introduced a 50 lakh rupees capital each. 50 lakhs into 4 partners, 2 crore rupees. But all are not active, they have some other obligations. They have given all the responsibilities to one partner. Now what other partners will think now? Will they strongly believe that one partner or strongly believe the books of accounts? Take your own example. You are all 4 or 5 friends are started a business. Will you believe the partner or will you believe the books of accounts? Will you believe the human beings or will you believe the paper? Will you believe human beings or believe the paper? Paper. Nobody will believe other persons because other person may be manipulated person. His mindset may be manipulated. Yes or no? So instead of writing some 500 rupees expenditure, the partner may write 5,000 rupees expenditure. And he may voluntarily appoint some other related parties as employees. Yes or no? Now he may not run the business as per the partnership deed also. And you want to go out from the firm. When you want to go out from the firm after 20 years of the partnership firm, you want to settle down all the liabilities and assets or you want to leave everything? You want to settle down. What is the base for settlement? What is required for settlement of the assets? Very good. Books of accounts is required. What books of accounts auditor is, that means partner is going to believe? Audited books of accounts or unaudited books of accounts? Audited books of accounts they are going to believe. Now tell me, income tax officer is asking you to bring the books of accounts as they strongly have a doubt that you paid less tax. Will you go and submit the audited books of accounts, unaudited books of accounts to income tax department? Yes or no? Now examination they may be asking, what are the advantages of the audit of books of accounts in case of partnership? Audit is not mandatory as per Partnership Act. Then people go for audit. What are the advantages of the audit of books of accounts in case of the firm? So you can write number of points. Admission of a partner, goodwill can be calculated. Retirement of a partner, he can give settle to the partner. Death of a partner, we can give the amount whatever standing in the capital account as per the audited books of accounts to legal heirs. Yes or no? In case of the income tax notices, GST notices, audited books of accounts can help the organization to settle the respective taxes. Yes or no? Shall we proceed? Let us see the advantages. First one, in case of disputes. In case of dispute, what accounts are going to help? Audited accounts are going to help. In case of dissolution of firm, I am closing my firm, 4 partners, how they are going to settle down the accounts? As per the audited accounts. So audited accounts are reliable or unaudited accounts are reliable? What is the meaning of reliable? Believable, trustable. Example, you are going for a bank loan, you approach a banker. Banker will ask for the bring the financial statements. You submitted the unaudited financial statements. What banker will ask now? Go and get the audit seal and signature on the particular financial statements. That means banker is going to believe only audited financial statements. So hence it is a reliable, hence I will go for the audit of books of accounts. In case of dissolution, audit of books of accounts will be helpful to settle down the liabilities assets among the partners. In case of dispute among the partners, audited accounts will be helpful. In case of admission of a partner, I can calculate the goodwill and I can reevaluate my assets also. In case of the control, it will safeguard the working partners in case of those partners who are not actively associated with the partnership. Example, there are 20 partners. 20 partners may not regularly come to the office. Yes or no? So audited accounts will be act as a control over the person who is working in the organization. 19 partners may be in different locations, different countries also, but always they have a control over other person only because of the audit. So these are the advantages of the partnership firm. What are the advantages? Disputes can be settled. In case of dissolution, assets and liabilities can be settled, and it will be act as reliable in case of the bank loans. And admission of a partner, goodwill calculation will be easy. Then control in case of the partners who are not actively associated with the firm. Shall we? Easy or difficult? Partnership firms audit. From the classroom, can we go directly to exam and write? No. Now let us go for the limited liability partnership firms. Limited liability partnership firms. So before understanding the limited liability partnerships, we need to understand the firms versus LLPs. What is the meaning of LLP? Limited liability partnership. What is the firm? Unlimited liability partnership. So when the LLP is a limited liability partnership firm, normal firm is a unlimited liability partnership firm. So all the partnership firms will be regulated as per the Partnership Act 1932. Or LLPs will be regulated as per the LLP Act 2000. Firms are under the control of Registrar of Firms. LLPs are under the control of Ministry of Corporate Affairs. Which means when I want to register my firm, normal firm, where I will go and register? Registrar of Firms, I will go and register. I want to register my LLP, where I will go and register? MCA, Registrar of Companies, ROC is the controlling authority for this. So minimum 2 partners, here also minimum 2 partners. Here we call it as a partners, in LLP we call it as a designated partners. Members associated with the firms are called as a partners in case of the partnership firm. Members associated with the LLP, we call it as a designated partners. Now in case of the normal partnership firms, now listen very carefully, very important point to be noted. Liability is what? Sorry, unlimited, which means if the firm is unable to pay its debts, partners' personal assets can be sold and can be settled. That's what the meaning of the word unlimited. In case of limited liability, in case firm is unable to pay its debt, opposite person can maximum recover from the partnership firm only. Firm assets can be sold. They cannot go and touch personal assets of the partners. That's what the limited liability. Sir, in case of the normal firm, it is unlimited. You can come and touch my assets. I don't have any problem. That's what Act says. In case of limited liability, my liability is limited. If you want to settle down the assets, settle down the firm assets, don't come to my personal assets. So in that case, how to create the confidence to the users? In normal firm, anyway, they will come and attach my personal assets. In the case of limited liability partnership firms, when the firm is unable to pay, nobody can help. Hence, in case of LLP, a new concept is introduced by the Government of India. That means every year they have to submit solvency certificate, which means what? The firm is solvent. The firm is solvent. What is solvency? What is insolvency? Unable to pay the debts is called insolvent. What is solvent? The firm is able to pay the debt, sir. The firm is able to pay the debt. No problem at all. We are ready to pay the debts. So solvency certificate should be submitted by LLPs. There is no concept of solvency certificate here. So these are the fundamental points relating to LLP and partnership firms. With this background, firm and LLP background, now let us go for the limited liability partnership firms audit. So we'll take a small break and we'll continue the class. 15 minutes break. Now let us understand about the limited liability partnership audit. So point to be noted for examination in case of the limited liability partnership firms. So just now we discussed that we need to get the solvency certificate because of the limited liability. Now same like partnership firm only, all the terms and conditions, but wherever there is a partner, in case of LLP we call it as a designated partner. So minimum 2 partners. So to form the limited liability partnership firm. Now the 2 partners will be called as designated partners who are required to take designated partner identification number. So in case of companies we are going to have DIN number, right, direct identification number. So exactly similar lines here, partner identification number. So every designated partner must be having designated partner identification number. So minimum how many partners? 2 partners in case of LLP, and all the 2 partners will be called as what partners? Designated partners. MCQ based question may be given. So partners in case of LLP is called as managing partner, designated partner, authorized partners, then active partners, like that they may give the question. So in case of LLP we call it as designated partners, and they are required to take what number? Designated partner identification number, DPIN, partner identification number. For whom they have to get the DPIN? All designated partners. How many designated partners are required to form a LLP? Minimum 2 designated partners required to form a LLP. Now in case of the normal partnership firm, we are going to draft an agreement. Yes or no? We have seen name of the firm, capital clause, liability clause, then interest on capital, everything. Exactly similar lines in LLP also, they are going to have an agreement between the partners. Now, this LLP has given a definition for small limited liability partnership firm. Normal LLPs, small LLPs, normal LLPs, small LLPs. So examination important question. See, as far as exam is concerned, they may be testing in different ways. Now exams they are asking the case based questions. They will give very big case study. In entire case study they may be asking the 5 or 6 questions. So each and every question having 4 or 5 options. So 4 options, and you need to choose the right option. So in order to answer the case based presentation questions, we need to understand in depth of the particular concept. So small LLP. So when we call as a LLP as a small LLP, they given 2 conditions, and 2 conditions should be satisfied. It is and condition, not or condition, it is and condition. Okay. So the contribution, what is the meaning of contribution? Capital. Who are going to contribute? Designated partners are going to contribute a capital. The contribution does not exceed 25 lakh rupees. How much? 25 lakh rupees, or such a higher amount not exceeding 5 crore rupees as may be prescribed. So contribution should not exceed how much? 25 lakh rupees. What is the higher capital, higher limit? 5 crores. So if it is within the 5 crores, we call it as what? Small LLP. Regarding turnover, as per the statement of accounts and solvency for the immediately preceding financial year, it does not exceed 40 lakh rupees. 40 lakh rupees, or such a higher amount as may be prescribed. What is the prescribed amount? 50 crores. So turnover should not exceed 40 lakh rupees initially. So it can go up to 50 crores also. Capital should not exceed 25 lakh rupees. It can go up to 5 crores also. So maximum limit is 5 crores in case of the capital, Maximum limit is 50 crores in case of the turnover. Shall we proceed? Now, so why this is important? This is important because of this particular clause. Mark it as important for examination. Audit of limited liability partnership firms. Tell me, normal firm, audit is mandatory or not mandatory? Normal firms, not mandatory. Normal firms are under the control of which authority? Register of Firms. Limited liability partnership is under the control of MCA. Now, Ministry of Corporate Affairs, LLP Act says, in the following situation, audit of the accounts of LLP is not required to be audited. In this case, what is not required? Audit is not required. In case of limited liability partnership firms. Mark it as very important for examination. What is turnover limit? 40 lakh rupees. Up to 40 lakhs, audit is not required. Contribution limit, up to 25 lakhs, audit is not required. Shall we? No. Now, designated partners decided to go for audit voluntarily. Can they go? Yes. Why? Act says audit is not mandatory in the following situation. If voluntarily they want to go for audit, they can go for the audit. Shall we? Now, please remember the limits. In case of the turnover up to 40 lakh rupees, audit is not required. In case of the capital, up to 25 lakh rupees. In case of the capital means contribution by the partners, 25 lakh rupees, audit is not required. No. Next important point to be noted for examination. We are under the control of LLPs, under the control of which authority? Ministry of Corporate Affairs. Means what? Register of Companies. ROC is the controlling authority for LLPs. Who is going to issue the certificate? ROC is going to issue the certificate. Now, as far as ROC is concerned, every LLP must file the following documents with the ROC. So, LLP, every LLP, please note the word every, would be required to file annual return. What return? Annual return. That means yearly once or yearly twice? Yearly once. Form number 11. What is the application form number? 11. All these are MCQ based questions. With register of companies within 60 days of closure of the financial year. What is time limit for filing of this application? 60 days from where? Closure of financial year. When we are going to close the financial year? 31st March. Now tell me, when is the last date? 60 days means what? April, 30 days, May, 30 days. So 30th May is the last date for filing of the particular application. Is it required in case of normal firms? Not required. Why? Normal firms are not under the control of ROC. So only in case of limited liability partnership firms, every LLP or only big LLPs? Every LLP means what? Small LLP as well as big LLPs. So every LLP would require to file what return? What is the form number? What is the deadline? 60 days from where? Now the point to be noted here is, after this has been filed with the Register of Companies, any of the public want to verify this document, they can pay the fees and they can verify. It is not possible in the case of normal firms. Example, normal firm is filing what is my turnover, what is my expenses, everything with the Register of Firms. Okay. First of all, they are not required to file any of the document with the Register of Firm. So here transparency is more. So now, will you believe LLP or will not believe LLP? Why you believe LLP? If you want to get any information, pay the fees and get the document and verify. But normal firms, it is not possible. Shall we proceed? Second point, mark it as important for examination. Every LLP, again, what is the meaning of every? Small and big LLPs, is required to submit statement of accounts and solvency certificate in form number 8, which shall be filed within a period of 30 days from the end of 6 months the financial year to which the statement of accounts and solvency relates. From where you should calculate 30 days? From the end of 6 months. So when financial year is going to close? 31st March. When the 6 months is going to close? 30th September. When is the last date? 30th October. So within 30 days of from the end of 6 months of the financial year, what to be filed? Statement of accounts and solvency certificate should file with ROC. What is the form number? 8. Who has to file? Not LLP, every LLP. Please remember the keywords. So these are the 2 returns to be filed every year by the LLPs. What is the 2 returns, sir? Form number 11, form number 8. Form number 11, what is the deadline? 60 days from the closure of the financial year. So what form number 11 contains? Annual return. To whom LLP has to submit? ROC, Register of Companies. So what is the second form to be submitted? Form number 8. What form number 8 contains? Statement of accounts and solvency certificate. What is the meaning of solvency? Our LLP is able to pay our debts. We are having very good solvency, which creates the confidence to the users. So statement of accounts and solvency to be filed by the LLP yearly once or yearly twice? Yearly once. What is the form number? 8. Within how many days they have to submit? 30 days from the end of 6 months from the closure of financial year. Shall we proceed? So in LLP, so far we discussed about 3 important areas. One is, what is the meaning of small LLP? Small LLP means an LLP whose contribution is up to 25 lakh rupees, or the higher amount may be 5 crores. The turnover of the particular LLP may be up to 40 lakh rupees. The maximum cap can be 50 crore rupees. And audit of LLPs, for whom audit is exempted? Small LLPs audit is exempted. Who are called a small LLP? Whose turnover is up to 40 lakh rupees, whose capital is up to 25 lakh rupees, we call it as small LLPs. Now, every LLP has to file how many returns every year? 2 returns. What is the form numbers? Form number 11 and form number 8. So form number 11, what we are going to submit? Annual return. What is the due date? 60 days from the closure of the financial year. So next, what is the form number? Form number 8. Form number 8 contains how many documents? What are 2 documents? Statement of accounts plus solvency certificate. What is the due date? 30 days from the end of 6 months from the closure of financial year. Shall we now? What is the auditor has to, what are the duties of the auditor relating to LLP? So normal partnership firm, what auditor is verifying? We have seen the deed, partnership agreement copy we have taken. From that agreement copy, we are verifying clause by clause, clause by clause, clause by clause, clause by clause, clause by clause. Yes or no? In LLP also, we are going to check the clause by clause only, but almost all points same as partnership firm. But in examination, be cautious. Don't write partner. In case of LLP, write as a designated partner. Clear? Now, in case of limited liability partnership firms, the duty of the auditor is first draft an engagement letter and you should give it to the management of the company and you have to get it signed by the particular management. What is the engagement letter? Letter which talks about the auditor engagement and auditor responsibilities and management responsibilities and objectives of the auditors, fees of the auditor, report of the auditor. What it talks about? Engagement letter talks about how many areas? 5 areas. What is the 5 areas? What is the object of audit? Very good. Management responsibilities, auditor responsibilities, reporting, fees. If fees is not given engagement letter, it may be given separately also, no problem. But what is mandatory? Very good. Objectives, management responsibility, audit responsibility, reporting is mandatory. It should be given a engagement letter. So same like company only, because it is under the control of what? ROC. Because LLP is under the control of ROC, almost all procedures same like as a company only. Shall we proceed? Now first, what auditor has to ensure? There must be a audit engagement letter which should be signed by the auditor, given to the management. Management has understood each and every condition given in the engagement letter and auditor has to get back from the management. Auditor should get defined instructions in writing as to work to be performed by him. So engagement letter contains instruction means what? What is the management responsibility? What is the auditor responsibilities? What is my responsibility? What is the object? Why we are doing audit? Everything. So what is the object of audit? Normally we discussed in SEP 200. What is the object of audit? As per SEP 200. Very good. Get and give. What you should get? Reasonable assurance. What you should give? Opinion. Get from whom? Issue the opinion to whom? Appointing authorities. Yes or no? No. Now it is the duty of the auditor in case LLP read the minutes book. What is the meaning of minutes book? Discussions of the meetings recorded in a separate book is called as minutes book. Why auditor has to read the minutes book? Because it is not possible for the auditor to go and sit in every meeting. So if you read the minutes of the meetings, auditor can understand what kind of decisions management may be taken, designated partners might be taken. So all business related decisions may be taken in the meetings. So it is the partners maintain a book, minutes book, auditor shall refer it for any resolutions passed regarding the accounts. What is the meaning of resolutions passed? What is the meaning of resolution passed? Very good. Decisions taken is called as resolutions passed. So in case of limited liability partnership firm, how to do the audit? First, enter into the arrangement. How to enter into the arrangement between auditor and management? Via instrument called letter of engagement. Who has to prepare letter of engagement? Auditor has to prepare letter of engagement. Signed by whom? Auditor. Issued to whom? Management. Management should do what? Read the terms and conditions, then understand the terms and conditions, then sign the document, give it back to the auditor. Then what auditor will do? Auditor will start the work. Shall we proceed? Now third point. Now for each and every special audit transactions, that means it may be LLP or a trust or a society or educational institution, we given one common point: understand the client nature of business. Understand the client nature of business. Sir, how to understand client nature of business? In case of firms, what you have done? You have taken the partnership agreement and you have read all the terms and conditions, you understood about the business. You do the same thing in LLP also. Take the LLP agreement and note down the following provisions. What LLP agreement contains? Same points whatever given in the partnership firm, almost all points repeated here. Shall we? Now, nature of business. Nature of business must be a legal business. You cannot carry out the illegal business here. Auditor has to ensure that they are carrying out the legal business and the business as defined in the agreement copy. You are told agreement copy is given one business and you are doing some other business. Auditor has to be very careful in this case. Second, by taking this agreement copy, what you can understand? What is the contribution of the partners? Contribution means what? Capital of the partners. Then on the capital, what firm is going to pay? Interest. Then duration of the firm. What is the meaning of duration? Time period of the partnership firm, whether the partnership limited liability partnership firm is for 1 year or 5 years or 10 years or 20 years or at my will. That means what? It is my will, I can close the firm at any point of time. Now I can't say duration. Shall we? So why duration important? Example, you are doing seasonal business. In that case, duration is important. So we are going to form the partnership firm, limited liability partnership firm. Once season is over, we will close the partnership firm. Shall we proceed? Now what auditor has to note down? Nature of business, capital, interest, duration, drawings allowed to partners. What is the meaning of drawings? Using the amount from the firm for the personal expenses called as drawings. When you invest some amount in the firm, we call it as capital. When you withdraw some amount in the firm, we call it as drawings. So drawings should be taken as per what? LLP agreement, you should take the drawings. Next, salary, commission payable to partners. Partners are regularly working in the partnership firm. So they are expecting what? Salary. If employee working in a partnership firm, we are paying what? Salary. Like partners are also working like a principal agent relationship. We are paying what? Salary. But it is not a salary, we call it remuneration. It is not a salary. Why? There is no employer-employee relationship. So hence we call it as a remuneration. So there may be a commission clause in the partnership agreement. So partners may be paid commission also. Yes or no? No. Borrowing powers. Normal firm also we given borrowing power. From where I am going to borrow? Banks or NBFC. So what is the maximum amount I should borrow? I don't know. Read the deed. Rights and duties of partner. There are 5 partners. Partner 1, what is your duty? Partner 2, what is your duty? Partner 3, what is your duty? Based on your duty only, I am going to pay what? Salary and commission. So what auditor has to do? Auditor has to read all these points. Then settlement of accounts. At the time of admission, retirement, it is not admission, dissolution. So in student material there is a mistake. So please strike off that word. Admission is repeated. So admission, retirement, dissolution. So please understand, we are taken the ICA material and we are discussing the every topic. So it is very easy for you to score marks in the examination because you are going to write the same language. Then any loans. What is the meaning of advanced by partners? Given by partners. So instead of going to a bank, banker is asking CIBIL report, security, then he is charging more interest also. So partner is having very good capacity to give the loan to the firm. Partner can give a loan to the firm also. So where it should be mentioned? Agreement copy it should be mentioned. Who has to read this point? Auditor has to read this point. If agreement copy says designated partner should not give any loan to the partnership firm, then you cannot give the loan. Shall we? Profit sharing ratio. Sir, all these points we have already seen in the normal firm also. But what is the difference between normal firm and LLP? Here liability is limited. Because liability is limited, we got berth for one more document here. What is the document? Solvency certificate. Who has to submit the solvency certificate? LLP or normal firm? Every LLP or only small LLP? Form number 8. What is due date? 30 days from the end of 6 months of the closure of the financial year. So remember this point. So auditor has to read all these points and he has to carry out the audit accordingly. So once audit is over, what you write in engagement letter, what you are going to do? You have to give the report. Why you should give the report? To get the fees. If no report is given, they will not give the fees. Now tell me, to whom I should give the report? Very good. Whoever appointed the auditor, we are going to give the report to the appointing authorities. In case of LLP, who is going to appoint the auditor? Designated partners, because there is no other authority to appoint. Shall we? Now to whom the auditor has to give the report in case of LLP? To designated partners I have to give the report because they only appointed me. Now let us go for the last area of discussion. Auditor should mention whether the records of the firm appears to be correct and reliable, whether he was able to obtain all the information and explanation necessary for his work, any restrictions was imposed upon him. What is the meaning of restriction? What is the meaning of restriction? Limitations. If the management limit my duties, what it called as? Inherent limitations of audit. Shall I proceed? So with this LLP is over, sir. We discussed all the points in LLP, sir. We have not left anything. So because this is important for examination. So all special types of audits look like the same content. But only thing is we have to change the language. Shall we proceed? So now charitable institutions. So charitable institutions, NGOs and clubs. The language of the all 3 points looks like the same. So NGO, non-governmental organizations, charitable institutions, so both organizations, the language look like the same. Okay. Now let us go for the explanation of the particular concept. Charitable institutions or NGOs. In India, how many ways I can do charitable activities? Or how many ways I can do NGO activities? 3 ways. One is I can form a trust and I can do the activity. Second one is I can form a society and I can do the activity. Third one is I can form a company and I can do the activity. All trusts are under the control of Indian Trust Act. Societies under the Central Societies Act. Or State Societies Act. Companies are under the control of ROC. We call it as a Section 8 companies. You take any organization in India, those who are doing NGO activities or a trust activities or a society activities, this can be done only by way of 3 ways. Who has to understand this? Auditor has to understand. That's what the first point we wrote in all the papers, all the topics. Understand client nature of activities. Now in examination, whenever the question given from these particular 2 areas, NGOs, charitable trust, first point you should write down how it has been constituted. How it has been constituted. Who has to understand? Auditor has to understand how it has been constituted. Shall we proceed? Now point number 2. Now tell me, my dear friends, in case of the partnership firm, to understand about the partnership activities, what you have read? Partnership deed you have taken from the management and you have read each and every point to understand. Tell me, in case of LLP, to understand about LLP, what you have read? LLP agreement, you have taken LLP agreement from the management, you have read what is the designated partners, who are the designated partners, what is the capital, what is the interest, everything. Now to understand about NGO and trust, what you have to read now? In case of societies, so constitution documents. Constitution documents. What are the constitution documents? Again, trust, society, company. In case of company, take memorandum of association and articles of association. In case of society, take the bylaws. In case of trust, take the trust deed. Auditor has to take, collect, obtain and read the following documents to understand about the nature of activities which have been carried out by the respective organizations. If auditor is doing the audit of a trust, auditor has to read what? Trust deed. If auditor is doing the audit of NGO or society, he has to read what? Bylaws of the society. In case of society, we don't call it as a trust deed. In case of company, auditor has to read what? Memorandum of association or articles of association, because it is a company. Company can be incorporated only with the memorandum or articles. May be a profit motive company, may not be a profit motive company. Shall we? So in case of the charitable institutions, in case of the societies, in case of the NGOs, auditor has to understand first about the constitution, how it can be verified by checking the constitution documents. So what are the constitutional documents regarding the trust deed, regarding societies, bylaws, regarding the companies, Section 8 companies, MOA and AOA of the organizations. Shall we? Now please understand, please understand, please understand. It is very, very easy for exam. Shall we proceed? Tell me, my dear friends, income and expenditure account. Let me write down here balance sheet. Whatever you know, you tell me. what is the major incomes and major expenses for the any non-profit motive organizations. How non-profit motive organization will get the major receipts? Very good. Donations, subscriptions, they will subscribe for some magazines in case of the NGOs. For example, there is a Ramakrishna Math. We are getting magazine every month, Ramakrishna Math. There are medical associations every month. There Institute of Chartered Accountants of India, it is giving magazine every month. We are paying amount for that. It is not free of cost. Subscriptions. Then how it is going to get the grants? Very good. Government is going to give the grant. Then membership fees. Very good. Now tell me the expenses. What is the major expenses for this? They have to run the activities, no? Now how they can run the activities? First of all, they have to take one premises and they have to pay rent. The moment rent means automatically which will come? Electricity will come. Then they want to create some posters and all, printing and stationery expenses. Then they may be giving donation to some other similar activities. Very good. Administration expenses, salaries. They may do some programs. Okay, program expenses. These are the major expenses for any organization. Program expenses covers all kind of expenses. Admin expenses covers all kinds of salaries, everything. Administration charges. Shall we proceed? Now the result is what? Income and expense result is what? Surplus or deficit. So in case of the non-profit motive organizations, we call it as a corpus fund, not a capital fund. Not a capital. Okay, corpus fund. Shall we? Now surplus will be transferred to where? Corpus. Now what should I do with this corpus fund? I got the surplus amount. What should I do? Very good. Investments. Because of investment, what I am going to get again? Interest or dividend. Shall we? No. I have to maintain everything where? Bank account. I should not maintain cash. I may be having some cash balance. That is very negligible amount. We call it as impressed cash for day-to-day expenses. In my balance sheet, I may be bought some fixed assets also, like land and buildings. Yes or no? No. Here I may be having some receivables because I may get the subscriptions receivable amounts, and some of the cooperative societies, NGOs may be given some loans also. They may get the loan recoverables. Now loan payables. Now tell me, my dear friends, in case of NGO, in case of the trust, what auditor has to verify? What are the areas of the audit? All these points auditor should verify. Once auditor verify all these points, audit is over. He will submit the report. That's all. Impressed cash. Impressed means for day-to-day expenses, we will take some amount and we will spend. Because we should not maintain main cash, right? Because I don't get any cash. Why I don't get any cash? Why I don't get any cash here? Very good. Because maximum cash I can receive only 2000. as per Income Tax Act. Beyond 2000 rupees, I cannot get any donation in the form of cash. So majority amount will come to the bank. To meet small expenses in my organization, I may take some impressed cash. Based on this background, shall we proceed? What auditor has to verify? No. Let us go for the main concept now. Auditor of charitable institutions. Now, what kind of financial statements charitable institutions has to maintain? Receipts and payments account, income and expenditure account, balance sheet. So these are the typical financial statements in case of any non-charitable organizations or NGOs. Yes or no? Shall we proceed? Now, what auditor has to do here? In case of audit of charitable institutions, more focus should be given to the following matters. There are general points. So read the constitution. What is the meaning of constitution? How it has been established. Auditor has to understand how it has been established, either by way of trust or by way of society or by way of Section 8 companies. So which charitable institution has been set up? So it is a religious charitable trust or public charitable trust, we need to understand. Now point number 2 to be verified is whether the institution being managed in the manner, what is the mean manner? As per the rules. If it is a trust, as per the Trust Act, we have to run the trust. If it is society, as per Society Act, we have to run the society. If it is a company, as per Companies Act, we have to run the company. Who has to check the compliance? Auditor has to check. As per what standard? Standard number 250. What is the standard number? Now tell me, my dear friends, whether the standards and auditing applicable only to the profit oriented organizations or not profit oriented organizations also. Standards and auditing is applicable only to profit oriented organizations. That means whenever I am doing audit, I should apply the standards and auditing only to profit oriented, non-profit also. Non-profit also. Shall we see examination question? Let us go for examination question first, then we will come back here. Because very important point for exam. Question number 34, page number 71. May be tested for examination. XYZ and company chartered accountants, auditors of Goodwill Education Foundation, a recognized non-profit organization, feels what? Feels. Who are feeling? An NGO is feeling. What is the feeling? That standards and auditing need not be applied as our organization is NGO. Comment. Is the feeling of NGO is acceptable, not acceptable? Why not acceptable? Standards and auditing is applicable to all kinds of organizations irrespective of whether it is a profit motive or non-profit motive. Why? Whenever you do the audit, how you should do the audit? Systematic and independent examination. Systematic and independent examination of books of accounts is called as audit. What is the meaning of systematic? As per the standards auditing. What is the meaning of independence? The opinion of auditor should be his own opinion. It should not be wish and will of the any other person who has appointed him. So systematic means as per the standards auditing. Independent means his own opinion. He has to conduct the audit in a systematic independent manner. So the systematic and independence should be applied to all kinds of organizations. What is the meaning of all kinds of organization? Whether profit oriented or not. That means systematicness applicable to profit oriented or only non-profit oriented or only profit oriented? Both. So systematicness means what? As per standards auditing. Now in the given question, the Goodwill Foundation says that standards auditing not applicable to me. Is the feeling of the institution is right or wrong? Now what is your answer for examination? Standards auditing issued by the Institute of Chartered Accountants of India is equally applicable to non-profit organizations also. Why? The reason is, whenever audit is carried out by the chartered accountant having certificate of practice, he has to carry out systematically and independently. Systematically means he has to comply with all the standards auditing issued by ICAI, irrespective of the organization audited is a profit oriented or not. In the given case, in the given question, the foundation is non-profit organization, still standards auditing is applicable to the NGO. Now see here, standards auditing will apply whenever an independent audit is carried out, that is the independent examination of financial statements and information of the entity, whether profit oriented or not, and irrespective of the size, legal form. What is the meaning of size? Micro, medium, small, large. Tell me, my dear friends, for a micro, SA is applicable, not applicable? Applicable. Small, medium, large, applicable. That's what, irrespective of the size. Shall we proceed? Legal form. What is the meaning of legal form? The organization may be incorporated under Trust Act, Society Act, Companies Act. Standards auditing is applicable. Shall we proceed? No. So what is the conclusion you should write in examination? In the given case, what happened? Even though the client is non-profit oriented entity, the standards auditing shall apply. If the auditor don't comply with the standards auditing, you are violating ICAI rules. Whenever you violate ICAI rules, it is a misconduct. So hence, the auditor shall be guilty of professional misconduct for fail to discharge his duties in the case of the non-compliance of standards. Yes or no? Who is the mother for all auditors? ICAI. So all auditors should give respect to whom? Your mother ICAI. Mother ICAI says to comply with the standards. If you don't comply, it leads to what? Professional misconduct. When it is a professional misconduct, automatically who will take action against the auditor? ICAI will take action against the auditor. Hence, what is the best possible option to the auditors? Whenever you go for the audit, comply with the standards auditing. If you don't comply, it means you are a negligent auditor. If you are a negligent auditor, I will take action. Clear? Next. So whenever you are doing the charitable institution audit, what you have to do? Read the constitution, verify the rules and regulations, then examine the internal control system and internal check of the companies, then verify the income and the amount received deposited in the bank regularly, examine the what? Trust deed. You are doing what audit? Trust audit. What instrument you have to read? Trust deed you have to read. If you are doing society, bylaws. If it is a Section 8 company, change the language. We will discuss about one area, we will go for other areas of discussion. We don't discuss similar areas again. Now what auditor has to examine, sir? Subscription donations auditor has to examine in case of trust. Trust is going to get what? Subscription amount. Trust is going to get what? Donations. Now what auditor has to do with this? Whether the subscription amount have been promptly collected or not. In case of donation, donation received amount have been spent for the purpose for which it is received. There is a donor. Donor is given a donation to do heart operation for a particular patient. For what purpose you have to spend? Only for the child heart operations. If the purpose is child operation. If the donor is not mentioned any reason, then you can spend for personal purposes. That means society objects, trust objects. Who has to verify this? Auditor has to verify. So annual life membership fees. So official receipts are issued. What is the meaning of receipt? Voucher. Receipt voucher should be issued whenever you collect the amount. No. Legacies. That means I am maintaining my trust from the various generations. It is for my forefathers, then my father, now my generation. So we are maintaining a legacy. Where is the legacy document? How to believe that it is your family organization? How to ensure that you are running the trust in a legacy way? Now auditor has to verify the amount received by reference to the correspondence with any figures and otherwise information available. My forefathers and forefathers has given this organization, sir. We are running for the 5 generations. We have seen in so many movies also. So it is one family which is running a trust. So legacy means it is coming from the various generations. Then grant. If the trustee received any grant from government, what auditor has to do? Auditor has to ensure whether grant have been properly recorded in the books of accounts, properly accounted. How to account the grants? Accounting standard number 12. Yes or no? So auditing paper is a mixture of all papers. It is a combination of all papers. It is a colorful subject, because in the auditing paper we are going to learn about income tax provisions, GST provisions, law provisions, accountancy provisions, all provisions, including cost accountancy, financial management. In yesterday class we have seen audit sampling, mathematical formulas, random sampling, everything we have seen. That means auditor has to understand all the areas. Then auditor has to verify what? Investment income. How many kinds of investments I can do? I can invest my amount in the purchase of building. What amount I am going to get? Rent. I can go and do FD in the bank. What I am going to get? Interest. So I am going to keep in mutual funds or shares. What I am going to get? Dividends. Now as far as investments are concerned, if the investments are kept in the form of the investments are kept in the name of the trust, then auditor has to ensure whether the income has been properly recognized or not. Now dividend amount, interest amount, you have to verify with the counter files. Counter file means acknowledgement copies. What do you mean of counter file? Acknowledgement copies. Shall we proceed? Now tell me, my dear friends. So we are discussed almost 15 to 20 hours so far. Tell me, we have how many methods of obtaining audit evidences? 7 methods. Now tell me, what is the best appropriate method I should apply for this particular verification? It is a investment income. I want to check whether income is correctly shown in the books of accounts or not. So tell me, 7 methods, no? Inquiry, inspection, observation, recalculation, re-performance, analytical procedures. So management already calculated the amounts and shown in the profit and loss statement, sorry, income and expenditure account. Now how you are going to verify? Very good. Just do recalculation, that's all. So this is the appropriate method I am going to follow. Then another method also I am going to follow called inspection of documents. How to recalculate? I have to inspect the document, then only I can do recalculation. Now there may be a doubt among the students. Sir, should I apply any one of the method or a combination of methods? I can apply any combination of methods. Now I am going to apply the inspection, I am going to apply the recalculation, and I am going to verify the investment incomes. So see, watch means what? Inspection of documents. Then check the calculations. How to check the calculation? You recalculate, then only you can check it. Then check the appropriate dividend has been received where any investments have been sold, ex-dividend, purchased, or cum dividend. So how to check it? I can inspect the document, then only you can check it. Then comparing, what procedure? Analytical procedure. One more audit method I am going to follow. Compare the amounts of dividend or the schedule of the investments. I may be invested in the banks, I may be invested in the mutual funds, I may be invested in the various public sector companies, I may be invested in the other companies as well. So I invested in some 50 companies. So how to calculate dividend? All 50 companies schedule I have to take, and I have to calculate everything, and I have to match with this amount. Then rental income. When I am going to get the rent? I am a trust. Take Tirumala Tirupati Devasthanam. Will TTD will get rent or not? From where? From chowdhuries. From chowdhuries. Rent only, right? So how I am getting rent? Because I have a lot of properties, I am giving on rent basis. It is a pilgrimage place. Whether rent have been properly recorded in the books of accounts or not. See, examine the rent rolls. Inspect the tenancy agreements. Example, you have a lot of properties. What you are going to do? You are going to construct some shopping complex, you are going to give on rent basis. At the time you are going to get a monthly rent. Whenever you are getting monthly rent, it is going to be supported by what? Agreement. Shall we? That means only one point we are discussing in all areas. Sufficient appropriate audit evidence. To get the sufficient appropriate audit evidence only, I am going to apply these methods. Yes or no? Understand in a conceptual way. Ultimately, I want to get what? Sufficient appropriate audit evidence. Why I need sufficient appropriate audit evidence? To get the reasonable assurance. Why I should get reasonable assurance? Because I cannot get absolute assurance. Why I cannot get absolute assurance? Because it is not possible due to inherent limitations. That's all. Shall we proceed? Now we are discussing about the trust audit. So in case of trust audit, you need to generally you have to verify the constitution of the trust and internal controls of the trust, rules of the trust. Then trust deed you should examine. Then you need to examine the subscriptions and donations. Then legacies, grants, investment incomes, rental incomes. Then special functions. Example, you are conducting some program. Function means not family functions, it is a programs. So when you conduct any program, for that particular program you are going to collect the fees. Example, you take out, so ICA is there, Institute of Chartered Accountants of India. We are conducting regional conference every year. Region wise you conduct a conference. We will pay the amount, we will go to the conference. It is specially conducted yearly once only. We will get the money or not. We are going to spend the money for the specific purpose or not. Similar lines here also, when the trust is conducting any special function, special program, then you need to maintain separate register for that. Auditor has to examine whether the special function, all incomes have been recorded and all expenses have been properly classified. In respect of any special functions, example, concretes, dramatic performance, in the aid of the charity. Done. So we are conducting one dramatic performance where the people come and perform, but we are going to collect some nominal amount of 100 rupees from each and every participant. There may be a 10,000 audience. 10,000 audience into 100 rupees I have to collect and I have to show in the books of accounts, and I am going to pay the hall rent, and I am going to provide tea and snacks, and I am going to provide all other mementos to the particular participants. My income is 0. But you have to prove that everything is supported with documentary evidence. Which is more reliable? Documentary evidence is more reliable or oral information is more reliable? Documentary evidence is more reliable. That's what auditor need to ensure here. Whether do we have all documents or not. Income tax refund. Why income tax refund? It is a trust. Trusts are not liable to pay in any income tax because they are registered under section 12A and they are going to get section 80G exemptions. Anybody contribute to the society, anybody given a donation to the respective trust, 80G exemption. Who is going to get 80G exemption? Donor is going to get 80G exemption. Donor given donation, for that donation I want to get exemption. To get exemption, trust has to maintain what certificate? 80G certificate. Now trust want exemption from income tax. For that, what is the section? 12A or 12AA, there are various sections. Okay. But what is the problem here? There is a problem in income tax. There is one rule in income tax, section 17 of the Income Tax Act. Section 17 of Income Tax Act says TDS provisions. What provisions? TDS provisions. Example, I kept 100 crores of my funds in the bank. What bank will do? When paying interest amount to the trust, they deduct TDS. But TDS income, interest income is exemption, or I am liable to pay tax? Exempted, because I am going to have certificate. But already banker is deducted TDS, right? They have remitted TDS income tax office, right? Now what should I do? The trustees calculate the TDS amount, everything, and they have to show properly in income tax returns, and they have to apply for the refund. Now income tax officer is going to check what? Yes, it is a trust only. They got the valid 12A exemption. They are not liable to pay any income tax. They are within the rules. They are following all rules and regulations. Hence, whatever the advance, or what is the TDS amount deducted from the particular assessee, let me refund this amount. Now, what auditor has to check whether the refund amount have been properly shown in the books of accounts or not. If it is a profit oriented organization, there is no concept of normally there is no concept of refund, because I am liable to pay, I am paying the tax. In case of non-profit organizations, I am not liable to pay the tax, but you collected tax from me, give me back. Yes or no? This is called as income tax refund. Actually, I am not liable to pay the amount, but TDS is already collected. Now, what auditor has to do? Auditor has to ensure that income tax refund with the correspondence with the income tax department, whether trustee is trying to coordinate with the department or not. Calculation of the repayment of the claims. I have submitted my claim to income tax office. What is my claim? Sir, my refund amount is 5 crore rupees. Who has to check 5 crores is correct? Auditor has to calculate. How you arrived the 5 crores refund amount? Now auditor wants sufficient appropriate information relating to this. So how auditor is going to get this? Inspect the documents, recalculate, then you will get the answer. No. Expenses. All the expenses must be supported by what? Sufficient appropriate audit evidence. So with the trust is over. Very important for examination. So we are discussing in detail because we are going to cover up only 7-8 areas in this particular chapter. So please make sure that we are understanding with examples so that the language can be reproduced in the exam as it is. NGO, same concept, but instead of trust, you are going to replace the word with NGO. So you are going to write donations, program expenses, subscriptions, income tax refund, everything. NGO was not liable to pay tax because non-profit organization, sir. Shall we proceed? We will take a break and we will continue the session. Next, we will continue with the Institute Audit of Educational Societies and educational institutions. So back to the audit of special types of entities. One more important question for examination, frequently tested in examination question, audit of educational institutions. Audit of educational institutions. So again, as far as the educational institutions are concerned, here educational institutions may be universities, maybe colleges, maybe schools. Now we need to understand the background of the topic first. So straight away when question is given in examination, straight away we have to answer for the given question. So as far as educational institutions are concerned, first we should understand that educational institutions might be established by way of the trust or society. So if it is a trust, we need to read the trust deed. If it is society, we need to read the bylaws, constitution of the institution. Now, if the educational institutions wish to offer any courses, what they have to do first? They have to go and get the recognition from the respective bodies. They have to get the recognition from the respective bodies. So, who can give recognition? University Grant Commission may be given recognition. Board of Intermediate Education may be given recognition. CBSE may be given recognition to run the classes for the students. So University Grants Commission for the universities, CBSE for the, or maybe state board may give the permission, Board of Intermediate Education for the colleges, Central Board of Secondary Education, CBSE. So respective institute has to get the permission from the respective authorities. So once they got the recognition from the Universities Grants Commission in case of universities, where the university has to establish their own bylaws and they have to introduce various courses and they have to prepare various materials, they have to conduct the examinations, then they have to prepare the question papers, then declaration of results and issue of the convocation, etc. Same like for the intermediate colleges, same like for the CBSE and state board schools as well. Now once we got the recognition, what we are going to do? The respective educational institutions are going to take up the building and there may be a first floor, second floor, third floor, and they are going to have a lot of classrooms here. Yes or no? And it may be rented buildings or own buildings also, right? So once you make all arrangements for your organization, so rented or own, then what we are going to do? You are going to introduce the various courses and you are inviting the students to join for the respective courses and admission process may start. So in order to settle down, in order to sit in the classes, and take up the classes, this education institution may make all the furniture arrangements, furniture and fixtures. Now tell me, my dear friends, income and expenditure of and balance sheet of education institutions. Now, what are the various types of collections as far as education institutions concerned? What are the different types of collections they will collect? Will you tell me the receipts, income side? Because once you tell all these points, these are the points auditor is going to verify. So first they have to give the admission to the students, so which is called as admission fees. Very good. Building fees. Then course fees. Then hostel fees. Very good. Festival or farewell function fee. Sports fees. Lab fees. Examination fees. Yes or no? Very good. Bus fees. Uniform. Library fees. These are the various types of fees colleges are going to collect from the students. And in case of the hostel, along with the fees from the students, they also collect the cash and deposit. Now let me write down here. Balance sheet, liability side of the balance sheet, because at the end of the course I need to repay this amount to the students, hence it is my liability. So cash and deposits. Shall we proceed now? What are the different kinds of expenses an education institution might be having? We link up each and everything. When I am collecting admission fee, I need to pay the university or license fees to the colleges, because they given the affiliation or they given the license. Then when I am collecting the building fee from the students, I may be having repairs and maintenance or rent. Yes or no? When I am collecting hostel fee from the students, I may be having hostel maintenance expenses like food, housekeeping, etc. When I am collecting a festival or farewell function expenses, at the same time I am having farewell function expenses here, or freshers day, or so many activities might be carried out. When I am collecting sports free from the students, I may be buying small items for the respective activities, maybe cricket kit, maybe tennis, like that. But if I am going to use it only for that particular match, I am going to treat it as my expenses. If it is my asset, then it will go for the stores. Yes or no? Then in order to run the lab, I need what? Computers. Yes or no? When I have the computers, again I am going to incur repairs and maintenance expenses of the computers. For all the computers, what I am going to install? Antivirus softwares. It is my annual expenses, so it is my expenditure. Now regarding examination, what is my expenses? Stationary expenses. Regarding my bus fees, what is my expenses? Bus fuel. Yes or no? Or bus hire charges, in case I have taken the bus on hire basis. Yes or no? Now driver salaries. Yes or no? Now in order to run the college, in order to run the schools, in order to run the university, I need staff. So I am going to pay what? Staff salaries. Yes or no? Shall we proceed? So in order to maintain an uninterrupted power supply in the colleges and the schools, I am going to maintain generator. Generator expenses like diesel, petrol, etc. Yes or no? So these are my typical expenses as far as the educational institutions are concerned. These are my broad incomes as far as educational institutions are concerned. Now any of the old students comes to the college or school, what they will do? Sir, I have studied in this particular school or college or university, so I would like to donate to the university. I would like to give a donation to my school, my college. So I may be getting some donations also here. And after giving donation, example is a science student, he might give an instruction to the principal. Sir, please use this donation amount only for construction of this so-and-so lab, or keep some computers, or keep some experiments or instruments in the college. So then it will become what? Specific donation. Other students may not give any instructions. It will become what donation? General donations. Yes or no? No. After all these things, I may get some surplus or deficit. Surplus amount, what I am going to do? Corpus fund. Corpus fund, what I am going to do? Invest. Out of investment, what I am going to get? Interest income or dividend income. While paying interest income and dividend income, what the bankers will do? They will deduct TDS. But am I liable to pay income tax? So what I am going to do? Apply for refund. If you write all these points in examination one by one, audit of educational institutions is completed. But in the institute material, they may given paragraph wise, point wise. Here we are learning as a financial statement wise. Shall we proceed? Easy or difficult? All points we can easily remember and produce in the examination. Now let us go for the institute material. Audit of educational institutions. So mark it as important for examination. It may be for the primary and upper primary schools and colleges and universities. Shall we proceed? Now. Examine the document, constitutional documents. What is constitutional documents means? In case of trust, trust deed. In case of society, society bylaws. Shall we proceed? So first auditor has to understand about the structure of the educational institution. How to understand the structure? How to understand the constitution? You need to understand how it has been established, either by way of trust or by way of society. Now, in case of a company, normally who are the authority who will take decisions in the companies? Board of directors will take the decisions. Yes or no? In case of the partnership firm, partners. In case of LLP, designated partners. What about in case of society and trust? So in case of society and trust, we call it as a committee. We call it as a committee. So when the committee have conducted any meetings, all the meetings will be recorded in a separate book called minutes book. Now being auditor, you have to read what? Minutes book of the meeting. Why you need to read the minutes book? Because auditor will not go to each and every meeting, and auditor need to understand what kind of decisions they have taken during the course of the audit. Yes or no? Shall we? Now first point is about the constitutional documents. Second point is about the minutes of the meetings. Auditor has to read. Why auditor has to read all these things? Only one point, to understand. Client nature of activities. Now what auditor has to check? broad classification: income, expenses, assets, liabilities. What is the approach? 7 methods: inquiry, inspection, observation, recalculation, reperformance, analytical procedures, external confirmation is the 7 procedures. So I have to apply these audit procedures in a combination, one or more combinations, in order to get what? Audit evidence. Then once I got the audit evidence, what I am going to do? Conclude the audit. How I am going to conclude? In the form of opinion. Shall we proceed? Now look into the first point: fees from students. What is the document I have to verify, inspect as far as the fees is concerned? Fees register I have to check. Yes or no? So check the names entered in the fees register. How many students are enrolled for the course? What is the fees fixed by the college? And how much fees is collected? How much fees is deposited? And how much fees is yet to be collected from the students? Do recalculation process. So amount of fees charged, then whether students are properly paid the fees or not. So how many classes they are running, from 1st standard to 10th standard, or 11th standard, 12th standard, degree 1st year, 2nd year, 3rd year, if they are PG 1st year, 2nd year, 3rd year. So how many classes they have? For each class wise you need to get the details and cross verify with the registers. Now then do analytical procedures. What you are going to do analytical procedures? Compare the counter files. What is the meaning of counter file? What is counter file means? Confirmation receipt. Confirmation receipts. And check the cash book and ensure that it is been duly passed in the books of accounts. All the fees should be credited to the fees account, debited to the cash or bank account. If the student is given cash, what is the journal entry we are going to write? Cash account debit to fees collected account. Yes or no? If the student is sent to the bank directly, bank account debit to fee collection account, respective fee to be credited. If it is admission fee, I will give credit to admission fee. If it is other fee, I will give credit to other fee. If it is bus fee, I will give credit to bus fees. Why this classification required? To compare with the previous years. Shall we proceed? No. Then finally, recalculate total of the various columns of the fees register for each month, and fees paid in advance have been carried forward to the next year. It is a balance sheet item or profit and loss account item? Advance fee receipts. Advance fee should be shown in the balance sheet, because it is not for this year, it may be adjusted for next year. Shall we proceed? 3 points we discuss in the fees. One is fees register, second one is counter files, third one is the recalculation of the fees. So first point is fees collection from the students. Then check the admission fees with admission slips signed by the head of the institution and confirm that the amount has been credited to capital fund. Capital fund, capital fund. Why admission fees credited to capital fund? Why? It is a one time in nature. Admission fee student will never pay every year. Only at the time of admission alone student will pay this fees. Hence it is in the capital nature, it will go to the capital. Unless managing committee taken a decision to any other accounting treatment. Shall we proceed? If the management has shown revenue as a capital, capital as a revenue, then it is going to violate the true and fair concept. So what is true and fair concept? Classification should be done revenue as a revenue, capital as a capital only. It should not be vice versa. Shall we? No. Free studentship. Why free? Army, Navy, Marine Engineers. Yes or no? So we may give the fee concession, or else parents lost in COVID time. Some of the colleges may give free student concessions. So it should be verified by the auditor as per the rules. Who is going to frame the rules? In case of company, who is going to frame the rules? Board of directors. In case of partnership firm, who is going to frame the rules? In case of the trust, who is going to frame the rules? Managing committees. If the student is not paid the fees within time, then college is going to collect what? Fines and late fees. And whether it has been properly recognized in the books of account or not, auditor has to check. And confirm that hostel dues were recovered before the students' accounts were closed. Their deposits of cost and money refunded. Example is the last year of the college. What the student will do? They will vacate the hostel. Once the student is vacated the hostel, what the management has to do? Refund the cost and deposit collected in the first year. How they will be refunded? Whatever the fee amount due from the student will be adjusted to cost and deposit. Example, student is liable to give 5,000 rupees fees. Already cost and deposit 25,000 deposited. What I will do now? I will 5,000 I will adjust here and I will pay only 20,000 rupees to student. Whether the treatment given like this or not, auditor has to check. So these are regarding the fees collection. This is the fees is the major receipt for the education institutions. Hence we are discussing about the fees register and counter files of deposits, then internal control system, then we are discussing about the admission fees, treatment for admission fees, how to give the treatment capital fund otherwise, then we are discussing about the free students, then we are discussing about the hostel fees also. So regarding hostel fees, what is the treatment to be given? Adjustment to the cost and deposit. Now other receipts are donations. Who will give the donation? Any of the student might be give donation. Who will give the grant? Government or similar organization may give the grant for specific purpose. Shall we proceed? Government may give the grant to construct the libraries. You have to use the amount for which it is given. Now auditor has to ensure that whether these grants and donations have been properly given the treatment. Shall you proceed? No. So other receipts means maybe rental income. Example, I have 5 acres of the land in my campus. What I will do? One banker has approached me. Sir, you have 5 acres of land. There are 10,000 students in your college and we will open new branch here. So the students can open the accounts, scholarship accounts, and we will also put one ATM center here for easy withdrawal of the cash. So colleges agreed for this, but not for free of cost. So use half acre of land for parking, everything. Okay, but pay me a rent. Yes or no? So it is my other income or major source of income? Other income. So rental income. Another example. Some other colleges has approached me to conduct their examinations in my premises. So what I will tell them? Please pay the rent and conduct the exam, no problem. It is my main source of income, other income. Other income, rental income. So if you have a land bank in university or a college, from that land property, I need to generate the rental income. This auditor should verify. Then surplus money where I am going to keep? All the surplus money where I am going to invest? Fixed deposits. All the surplus money where I am going to invest? Mutual funds or share market, if permitted by the managing committee or bylaws. So if I invested in a bank, what I am going to get from the investment? Interest income. So I am going to check whether the interest incomes have been properly received or not. And in case of the shares, I am going to get the dividend income also. Shall we proceed? No. Now any government or local authority grants, check with the grant order. If the government has given 5 crores grant order you need to check. Why you should check the grant order? What is the purpose of the grant? When you should spend it? What is the time limit for spending? What is the authority to spend this money? So to whom you can pay this money? Like that, there may be conditions. So being an auditor, you have to ensure that all conditions have been met by the educational institutions. Next. Expenditure. What are the various expenses in educational institutions? Very good. So for all the employees, I may be paying EPF, employee state insurance, professional tax, etc. Yes or no? Now I need to check what? Employee provident fund. I need to check what? Employee state insurance. Who told the auditor to check all these things? Who told the auditor to check all these things? There is standard called standard number 250. What is 250? Consideration of laws and regulations in an audit of financial statements. What I should consider? Consider all the laws and regulations. Employee provident fund is a law. Employee state insurance is a law. Professional tax is a separate law. GST is a separate law. Income tax separate law. FEMA is a separate law. Yes or no? But I am doing audit as per the managing committee order. So I need to consider all the laws, because I am what auditor? Statutory auditor. So after completion of audit, I should give the report, right? No. Verify the donations. If the college has given donation to somebody else, I need to verify this donation as well. Then capital expenses. What is the capital expenses? Construction of the buildings, construction of libraries, construction of hostel, construction of the sports equipments, or construction of the auditorium in the universities. All these are capital expenditures. So auditor need to segregate, auditor need to ensure whether management has been properly segregated these expenses and shown accordingly. Watch in a usual manner establishment expenses. What is the meaning of establishment expenses? All kinds of expenses, revenue expenses called as establishment expenses, salaries, rent, power, fuel, then repairs and maintenance, stationery, all put together we call it as establishment expenses. So auditor need to check establishment expenses with what? Supporting. What is the meaning of enquiry? Ask the questions if the auditor having any doubts. Shall we proceed? No. Salary register staff. Who has to approve the salaries? Board approve or managing committee will approve? Why managing committee will approve? Because it is a trust or society, there is no concept of board here. So only managing committee will approve the salaries. So when the salaries are given to the employees, so we need to check the salaries to staff also. Pay slips. So then major assets and liabilities. Any arrears? What is arrears? Fees arrears. If the student has not given the fees, so anyway student has joined in our school first standard, he will be in the same school up to 10th standard. So fee arrears might be my receipt. So I need to collect the fee arrears. Dormitory rent. What is the meaning of dormitory rent? Dormitory means a place which will be given for the 1 hour rent, 2 hour rent for sleeping purpose. So I have very good place here. So parents may come to see the students, those who are in hostels. So if the college may provide the free accommodation or they may give dormitory. So we don't allow to stay in the student rooms. You please take the other premises where we are providing dormitory facilities. Today night you sleep, sir, no problem. We pay the amount, we collect. Shall we proceed? Next. Caution money and other deposits paid by the students on admission have been shown as a liability. So student have paid the money. Why it is a liability for the institution? At the time of the exit of the student, at the time of the closure of the course, what is going to happen? I have to repay this caution deposit to the student. So it is my liability. I am liable to repay this amount to the student. So whether the proper treatment is given in the books of account or not, auditor has to ensure. Then auditor has to check what? Investments. Then auditor has to check other equipments. What equipment? Lab equipments, then computers working in the organization, everything should check. CC cameras whether working properly or not, auditor should ensure. Auditor should check the inventories. What is inventory? Stationery, books, then all pens, paper, everything is available in the schools and colleges. So furniture, stationery, clothes, provisions. Why provisions? In case of hostel, I will buy on bulk basis to save the amount. So there may be provisions also. So these should be checked with reference to inventory register and corresponding to inventory of the previous year. So what is the corresponding to inventory of previous year means? What it means? Standard number 520. Comparing with previous year, analytical procedures. At all the time I am going to apply only 7 procedures because I don't have any other procedure to verify. Shall we proceed? Now compliances. What is the meaning of compliance? Complying with law. So even though you are education institution, you need to comply with the law. So you need to comply with income tax law, you need to comply with the EPF law, you need to comply with ESI law, you need to comply with the professional tax law. So like this, what are the laws applicable to you, you need to comply. Now, in case of income tax, because it is education institutions, I am going to get what? A refund. Why refund? Education institutions are not liable to pay any income tax in India once they got the exemption from income tax office. But in case of the investments done by the concerned institution, the opposite person may be deducted TDS under chapter 17 of Income Tax Act. So this TDS amount to be refunded to the particular institution. When that refund will come? When I make application to income tax office, only refund will come. Now auditor has to check whether application, that means income tax return, has been submitted properly or not, and whether refund amount has been properly calculated or not. Auditor should recalculate this. Shall we proceed? Refund of amount. Why refund? Because it is given generally exempt from the payment of taxes. So other compliances. So maybe games fund, hostels, provident fund of the staff, so poor boy fund, etc., which will be government is requested to maintain these funds. So whenever you are getting some amount of surplus, from that surplus you need to transfer some portion to these respective funds as per the government norms. Hence, when it is a government norm, you need to comply. So these are the major parts as far as the education institutions are concerned. Shall we proceed? So education institution, very easy topic. Constitution of the education institution, then fee from the students. So in examination, how the questions will be framed? They may ask only how to verify the fee from students in case of education institutions. They may ask only what are the various other types of receipts in the education institution. So mention 4 5 other incomes, and they may give separate question how to verify the expenditure in case of education institutions. Then you need to remember major expenses, donations, capital expenses, establishment expenses, taxes, everything. Next, audit of hospitals. Audit of hospital. If you know the step-by-step approach in hospital, the examination question can be easily answered. What is the step-by-step approach in hospital? Now first, who will go to the hospitals? Patients. So very good. Now let me write here. Now there is a hospital. So patient will go to the hospital. Now what is the first step? What patient will do? First step, you tell me as per your own experience. Very good. First patient will go and approach the respective person and get the OP. What is the meaning of OP? Outpatient. Means what? Sir, I have a problem. I will consult the doctor. I will go out, sir. I will not admit into the hospital. Shall we proceed? When I say OP, after verification of the particular diagnose the problem, doctor may tell into the hospital also. So that is called admission in case of the serious issues. Now patient approaches, he has got the OP. Now what hospital is going to do? They are going to collect the fee. What fee? OP fees. Serial number, name of the patient, in time, health issue, fee. Now tell me, my dear friends, what is the source for the auditor to ensure the OP fee calculations are accurate? How to ensure whatever the OP fee shown in the books of accounts is correct? First of all, I have to, very good, check the OP register. If I check the OP register, I can understand how many patients visited today into OP amount. Yes or no? How many patients from that particular patients, how many are gone to next level? Now. So OP register is over. Now patient approaches the doctor. Now what might be the consequences, my dear friends? Patient approaches doctor. What might be happen here? Doctor will diagnose the problem and he has two options. What are two options? He may give Medicare. So go and take the Medicare and get the medicines. Second option, admit into the hospital. And he may refer for the lab also. Yes or no? Please go to the lab and I want these reports. Please go and have a blood checkup or CT scan or some other scan, and after you got all the reports, please come and meet me. So automatically lab will be maintained by whom? Same hospital. After seeing the lab report, what doctor will tell? Need immediate operation. Yes or no? Now normally patient visited the hospital, they got the OP amount, then they got the medicines amount, they got the lab amount, then they got the operations amount also. So in order to do the operation, what is required in the hospital? Operation theatre, OT. In the operation theatre, what must be there? Equipment must be there. Now what auditor has to check? Whether equipments are properly working or not, whether equipments are really existed or not, whether equipments are in the name of the hospital or not. Auditor has to check. This is the biggest asset in the hospital. Yes or no? Now operation theatre, operation is over. Now based on this background, tell me what is the major incomes to the hospital and what are the assets in the hospital? What are the incomes to the hospital? Very good. OP fees, then medicine fee, then operations fees, then lab fees. OP means consultation fees. Yes or no? Major, okay. Then if this particular hospital has given reference to some other hospitals, they will give a referral fee also. These are the typical incomes in the hospital. Yes or no? What is the expenses? Well, first, in order to check the OP, who is required in the hospital? Doctor remuneration, outside doctors, doctor consultancy fees. They may work in the part time in the hospitals. Then hospital rent I should pay, power I should pay, then repairs and maintenance of hospital I should meet, then various consumables I should buy for the give treatment to the patients. Yes or no? So these are the major expenses in any hospital. Housekeeping of the hospital. Yes or no? Yeah, doctor consultancy, doctor remuneration. Doctor remuneration is for the inside doctors, doctor salary and all. Then nurse salaries, staff salaries, anesthesia doctor salaries, all the salaries including the doctor salaries. You write down one more thing, staff salaries also. Now what might be the balance sheet items? Liabilities and assets. Very good. Equipments, furniture, ambulance, then stores and consumables, then building may be my own building, hospital building, yes or no? Land may be my own land. Then if hospital is invested, then I am going to get what? Investments also. Shall we? What are the liabilities? Capital, or in case of trustees running the hospital, corpus. You have seen there is one hospital, Kanchi Kamakshi Child Hospital is there. Okay, so trust. So then reserves and surplus, then expenses payable, vendor balances, that means creditors, I may be buying lot of materials from the various vendors. Then I may be taken loans from the banks to buy the equipments. I need to make the loans, I need to pay these loans. If the hospital is running by way of the trust or society, I may be getting legacies also, generation wise hospital maintenance. Shall we proceed? Now, based on this background, let us see very quickly we will complete this hospital. First one is what? Register of patients. Then collect the cash. Then you are going to get investment income. Why investment income? Surplus amount I invested in the bank or mutual funds or share market. Because of that, what I am going to get? Investment incomes. Why I am going to get the rent? Maybe in my hospital, other medical agencies started a medical shop. They are going to pay me rent. Yes or no? Food court, canteens, they may give the rental incomes. Then legacies and donations, auditor should check in case of hospitals. Reconciliation of subscriptions, every month the doctor subscriptions, doctor has to get the magazine, we need to get the amount from the respective doctors. Then authorization sanction, in case of any expenses, I want to construct the lab, I want to construct a patient ward, I need to get the authorization, whether the authorization letters are available or not. Grants and TDS, if I am getting any grant or if anybody is deducted TDS, I need to reconcile this. Then budgets, because hospital is frequently meeting a lot of expenses, it is better measurement and better control to have a budgets, and these budgets should be verified by auditor. Internal check, what is internal check? Internally anything is stored, anything is medicines, anything consumables available, this should be verified by the auditor. Then depreciation on the assets, then various registers like bonds, share market, ships, title deeds of the properties. Then compare this with the properties and investment registers, whether real investment, real document, real asset existed, book existed, we need to compare. Then inventories you need to check, because inventory registers maintained by the hospitals. Why inventory register? Every hospital is bound to maintain inventory register. Now why inventory register? There may be a stock in the hospital. Then management representation certificate. If management, you want to get any additional information of the management, you can get a certificate from the management. So these are the hospital audit. Straight away you can go on write patient register, then collection of the cash from the patients, investment from the, no, please note one word, income from investments rent is coming in all special audits. Yes or no? So there are some common points. TDS is coming in all points. Yes or no? Then internal check is coming in all the points. Reconciliation is coming in all the points. So these are the common points what you can write in examination. But we are giving explanation because you need to understand the background of the hospital, how they will run. If you understand the financial statements, you can frame the answer in examination. With this, hospital audit is over. Now audit of club, sir. You have seen so many Mailapur club is there. Then you have seen so many club, Rotary club is there. What is going to happen in the club? Very good. So club is for the various activities. Recreational facilities. Sorry. Shall we proceed? So club is for the various activities and recreational facilities. So who can go to the club? Very good. First, members. Public cannot go to these clubs. Members who are registered with the particular club only can go to the club. For which what they will pay? Membership fee they will pay. And they only can avail all these particular benefits. Shall we proceed? In order to provide benefits to these members, what the club will do? Club will buy groceries, they'll keep in the club, wine, they'll keep in the club, then various sports items, indoor games, they'll keep in the club, then rooms may be kept in the club for the stay purpose, they may give the rooms on rent basis. There is something called officers club is there. So they will give the rooms on rent basis, because when the rooms are ideal, I can generate some income from it. No, members can avail all these benefits from the clubs. Now what auditor has to verify? Membership fees, then subscriptions, then inventories, groceries and wines, that means inventory verification. So all these points auditor should verify. Club is having surplus income. What club will do? Invest in the investments. What we are going to get out of it? Interest and dividend. I am also giving some place to the some other persons. What I am going to get? Rent. So I am going to verify internally whether all the items are properly placed or not. Members will come and they will put somewhere else. Again we need to arrange everything for the next day. Internal check should be done by the management, and auditor has to check all, verify all these points. Shall we proceed? Now let us see the. To enter into the club, you are going to collect what? Entrance fees. Then once you become member, you are going to collect what? Subscription continuously. Entrance fees was only once. Then if you are not paid the subscription amount, we are going to treat it as a arrears, and again we are going to follow up with the respective members. Then arithmetical accuracy of the various registers. What is the meaning of arithmetical accuracy? Addition, subtraction, multiplication, division have done properly or not. Auditor has to ensure. Then irrecoverable members dues. Members are not paying their membership fees. Continuous reminders have been sent. What course of action they have to take? Remove the members from the register. As per what? As per the bylaws of the club. Next, pricing. Because I need to sell the wine, I need to sell the groceries, I need to sell the food, tea, coffee, everything in the club. So who has to fix the price? Club has to fix the price. So it should be subsidized price or higher than market price? Subsidized price only. Now the price should be verified by the auditor. Then members account, how many members are there in the club, how many members are newly admitted in this year, how many members have been removed this year, what is the closing members, auditor should check. Then purchases, what is the purchases in the club? So they are going to purchase the sports items, furniture, crockery, and trace the entries in the respective inventory register. Once you buy any item, you need to have a control over the item. So when you will get the control, immediately you place in the register. So auditor should check these purchases. Then margins earned. Why I am going to earn the margins? Because I am not selling at the market price. I am selling with the nominal margin. So nominal margin means I am going to get the gross profit, not the net profit. Because I am running the club not to generate the profit. I am running the club to serve to my members. So what kind of margins they are generating, and compare with the previous year as per 520 standard. And if any abnormal variances are there, please inquire further or perform alternative audit procedures. Inventories, physically verify the inventory. Who told the auditor to verify inventories physically? SA 501 told. What is SA 501? Audit evidence, specific consideration for selected items. Shall we proceed? Then investment, surplus funds, club is going to do what? Investment. Now what auditor has to do? Verify the investments whether properly have been shown in the books of accounts. Any income is generated out of the investment, verify it. Recalculate the income generated. Then management powers, because if it is a company, company have the board of directors to manage. If it is a club, managing committee is there to manage the club. What is their powers and responsibilities? What is the roles and responsibilities? Duties, everything will be verified by auditor. With this, the club audit is over. Easy or difficult? Shall we proceed? Cinema theatres. Again, let us have a explanation for this. Now tell me the process, cinema theatre process. No. Step by step you come, you tell. So cinema theatres. What is going to happen in cinema theatres? First there must be theatre. Okay. I am the auditor of the cinema theatre. Now what is going to happen in cinema theatres? First, how they will get the income? What is going to happen? First, now the person is going to come to the theatre. What is going to do? First, very good. Parking. Then what he will do? Then go and purchase the ticket. There is a ticket counter. Very good. Already ticket has been booked. Then you are going to get the confirmation here. Yes or no? Then you will allowed into cinema theatre. Then tell the process. Now, parking, ticket purchasing. Okay. Then confirmation of tickets in case of online ticket booking. Now you are entered into the cinema theatre. Now what is going to happen? Next step. What you will do? You tell process, normal process you tell me. Very good. You are going to check your seat. That means furniture and fixtures. Then what you will do? No, we are inside the theatre now. Okay. You want to come back again? Yes. After checking seating arrangement, she is coming again back. There is a food counters. Food counters may be cinema theatre own counter or rented. If it is a own, I have to pay GST. Rented, I am going to get the rental income. Okay, then again after taking food, same food, I will go into the cinema theatre. Now what is going to happen in theatre now? Now tell the process. First you took the bike or car, you went to cinema theatre, you decided to go for cinema, you went to cinema theatre, you parked the vehicle and you paid the amount. Now what is going to give now while you are parking a vehicle? Parking ticket. Very good. What is the meaning of parking ticket here? Why is giving ticket? Internal controls of cinema theatre. Okay. Now whatever I am writing here, auditor is going to verify these points. If you verify these points, cinema theatre audit is over. Shall we proceed? Now park the vehicle. Now parking may be again own parking, or you may be given on rent basis. Sir, I don't want to maintain all this headache. You take the parking area and give me monthly rent. You manage, you collect whatever the amount you want. Like that also I can sell. Now after park the vehicle, you went to the theatre, you collect the tickets. Now tell me, as far ticket is concerned, how many types of tickets might be there? Ticket types. I am talking about movie tickets. Platinum, gold, diamond. After gold what? Where is diamond? Platinum, diamond, gold, silver. Why you need this? I need to understand, being auditor, how many platinum tickets you have been sold, and how many diamond sold, how many gold sold, how many silver sold. How to reconcile it? How many shows? One show, morning show, afternoon show, evening show. There are some places where fourth show also allowed. Now what I do, being auditor, show wise reconciliation. Why? I need to ensure that there is no misappropriation of the funds. So this is the ticket reconciliations. So how to ensure this? Opening ticket number, issued, then closing ticket number. I am going to get the amount. Reconciliation of the tickets. Yes or no? So whatever the closing tickets available, rest of the tickets have been sold into rate per ticket. Now tell me the ticket rates. How the tickets rate will vary? Based on hero. Based on so based on hero, ticket prices may be different types. Then based on release, at the release time tickets may be very high. After few days ticket rates will come down, right? Then fans show, tickets may be very high. Yes or no? That audit, that we need to ensure. That means I need to understand the nature of business first, then everything will be done automatically. Now come to cinema theater. Now we are in the cinema theater now. Yes, what you want first after entering in the theater? What you want to get the feel of cinema theater? Very good. Air conditioners. The moment you went and take your seat, you want AC. That means air conditioner need to be checked. Then automatically all lights will be on when you entered. It will be off now once cinema has started. Very good. Now cinema has started. What is going to happen once cinema is started? Cinema started. What will happen now? Very good. Projector. In order to project, what is required? Screen. Projector screen available. Then what is required? Sound systems. All are available. Then what is required? License to play. Yes or no? Shall we proceed? Now everything is done. Movie name is coming. At the time of movie name is displayed, what is going to happen in cinema theater? Assume it is a Balakrishna movie. Whistles, breaking of the furniture. Yes or no? So tearing the tickets and thrown in the cinema theater and all. Yes or no? Okay. Then what is going to happen? Movie name displayed, movie started, then break. Okay, now tell me, it is a movie time, it is completely break time, then again movie time, again end. Yes. Now tell me what is going to happen before display of movie. What it means? Before movie is going to be played in cinema theater, what will be played? Very good. Advertisements. If you understand the concept, is very easy. Then during the break time, at the end also. Okay. So how they will play the advertisement? Exactly before movie name will be displayed, one ad will come. Initial ads are going on, one ad, second ad, third ad, fourth ad, like that. Now which ad will be more priced? Right before the movie, the price will be more. Now you need to calculate the advertisement income, and for this you need to verify the agreement copies. If it is every month I am playing some advertisement, means I may be having agreement copy. Only one time means maybe some normal arrangement might be there. Yes or no? So these incomes should be verified by auditor. So during break time, what is going to happen? Advertisement, again food court, they'll take the food and they'll come out. Yes or no? Yes or no? Now while you are entering into cinema theatre, at the time of entering into cinema theatre here, so there is going something called checking. Correct? Why checking? Why they will do check? Not for ticket. They know very well, unless if you have a ticket, you will not come to the movie. Because the person who is coming into the cinema theatre may come with the bombs, may come with the gun. Okay, it is called as what? Internal control system of the organizations. Now auditor has to verify all these things, then it will be completed. Shall we proceed? No. Let us come to the ICA material. First, what auditor should verify? Internal control system. Where? Or the entrance. Why entrance? Maybe to check the tickets, whether ticket is there or not. Maybe to check the explosive items, to check the some other food which is not allowed, you might be taken into the cinema theatre. To check whether you are alcoholic person or not. You may create nonsense in the cinema theatre. They don't want all these things, hence they have a control. Now auditor has to do a review of the control. Then what auditor has to do? Verify serial number in the cinema theatre ticket book. Do you observe any time ticket book might be available in the counter? They will tear and they will give the tickets. One ticket, that means serially numbered booklets. That booklets auditor should verify. If it is online means, we will export into some Excel, we have tools to verify everything. If it is physical, you need to verify the books. And that number of tickets issued for each show and class. What is the meaning of class? Platinum, gold, diamond, silver class are different through the number of the same class for the show on the same day, each week run serially. How many shows you have displayed, how many shows you have played, how many tickets you have sold, how many class of tickets, whether it is matching or not, auditor should verify. Shall we proceed? No. Advance booking of tickets. So for the today evening movie, I may be going, booking the ticket 2 days back. Example, Saturday or Sunday I want to go to a movie, 1 week back I will book the tickets. Example, it is 31st March. 31st March is a Tuesday. Maybe they are playing the movie on April 5th or April 4th, which may be Sunday or Saturday. On 31st March it is advance booking of tickets. So for which separate series of tickets is issued. For advance booking, don't mix with the regular tickets. Auditor has to ensure advance tickets of books. Then the inventory of tickets is kept under the custody of responsible person. Otherwise, what is going to happen? He will take all the tickets and he will sell in the black market. Hence, there should be internal control system in the office. So for what internal controls are required? Entrance, then serial number of the tickets, then for the each show, then for the books, then for the inventory, closing stock of the tickets. Then confirm that at the end of the show, a statement of tickets sold is prepared and cash collected is agreed with. Agreed with which means what? Matched. Then verify that record free passes. Example, MLA, MP, MLC, district collector, all are free. No need to take the tickets. They are reserved tickets. So how many free passes is given? There are some shows where students also allowed free for 1 day or 1 show or no 2 shows like that. So how many free shows have been played? We need to get the record for that. Reconcile the tax. What tax? Entertainment tax collected and remitted to government. Then you check the sale of tickets. Then check the advertisement expenses. Then shots exhibited kept at the cinema as well as the agreement copies. So advertisement expenses, how to check? You may be having agreement copies to check the advertisement expenses. Then verify the expenses. What is the expenses? 1 show is over. what they are going to do immediately, they will, housekeeping person will come and clean the theater immediately, and they will spray some perfume and all, they will keep ready, and they will immediately go and clean the wall, washrooms, everything, they will keep ready. Otherwise people will not come to your theater. Yes or no? Then I need a lot of staffs to maintain the cinema theater, so for which I need to pay expenses. Then lot of furniture, equipments, screens, then projector, air conditioners, furniture and fixtures, then chairs, everything, there may be depreciation. Whether depreciation have been properly calculated at the proper rates or not, auditor should check. How do auditor should check? Recalculate. Then payment to the distributor, because you need a license to play the movie. How much amount paid to distributor? Please check it. Then advances paid to the distributors. Sir, movie is going to release on January 1st. I want to book now. I will pay the advance amount. You please give me the license rights. I will pay the cinema. Then you need to check the advance payments also. Then inside the cinema theater, if you have restaurants or food courts, you need to verify restaurant income, and whether taxes have been properly remitted or not, you need to check. So if you check all these 11 points, cinema theater audit is over. Yes or no? Easy or difficult? If you know the nature of activities, it will be very easy. Still you can write the parking also. They are not given the parking. So these are the important areas in case of special audit is concerned. So we discussed about the educational institutions, we discussed about the charitable institutions, NGOs, clubs, then government audit. So then we go for, so hotels I am ignoring, because again hotels, everybody knows that, again hotel room rent. So let us check broadly. Fixed assets in the hotel. So what is fixed assets in the hotel? Cots, air conditioner, television, everything is the fixed assets in the hotels. Labor. So in case of room, there might be a room boy. So we need to maintain 7 in 24 hours. Then inventories. In case of big hotels, you need to maintain bar and restaurant, everything. Lot of inventory to be maintained. Room sales, hall booking, maybe function halls might be there. How much function hall income is coming, how many rooms have been sold, how many rooms are available first of all, how many rooms are vacant throughout the year, auditor should check. Then you may be having internal control system in the hotels also, because unauthorized persons are not entered into the hotels. Then traveling agents, because my customer is coming into the hotel, I need to pick up from the airport, then only will come to my hotel. So there may be a lot of travel agents might be there. Auditor need to check the travel agents if they are paying any commission. And inside the hotel there may be a shopping mall also. So they may keep some flower bouquets or gift items and all, because any person come to the hotel, he may going for some function, they will buy here, they will go to the function. So that the auditor should verify. So with that, cinema theater also over, hotels also over. Then cooperative societies I am ignoring. So with these special types of entities are completed. Government audit and all special types of entities. So charitable institutions, NGOs, local bodies, trust and societies, education institutions, club. So these 1, 2, 3, 4, 5, 6, the language is same. Just you need to change the name, like investments. In case of the NGO, you call it as a NGO. In case of local authority, local bodies, you need to call it local body. So these 6 questions answer remain the same. For other areas, firm and LLP already separately discussed. Read separately. Then hospitals, remember the activities. Cinema theaters, activities. Hotels, activities. We remember all the activities here, it will be done. Then government audit, read separately. So entire chapter might be having some 15 to 18 marks weightage if you are a lucky person, or else minimum 10 to 12 marks it will be covered in examination. Okay, so government audit, read separately. Then firms and LLPs, read separately. Then all 6 points whatever we discussed here, 1, 2, 3, 4, 5, 6, all 6 together read separately. So I am leaving only two areas, cooperative society, hire purchase transactions. Hire purchase transaction I am leaving it because it already covered in the accounts paper. So you can just reproduce the language here. Then cooperative societies I am not covering, you can read on your own. With this the complete chapter is done. Now let us go for audit of items of financial statements. Audit of items of financial statements. So another important area for examination, audit of items of financial statements. So these are the, I have given an example here. So section 2 subsection 40 of the Companies Act 2013. Every company has to prepare the financial statements which consist of the 5 components: profit and loss, balance sheet, cash flow statement, and this one is 4, this one is 5. Notes to account, statement of changes in equity capital. Done. Now normally the financial statements I have given for understanding purpose in T format, but normally it is in the schedule 3 format. For understanding purpose, for easy understanding purpose, we are giving in the T format. So typically in any organization, what are the various items might be there in the financial statements? So opening stock, purchases, direct expenses, maybe returns, sales returns, then sales might be cash and credit sales, then goods sent on return on sale basis, consignment basis, purchase returns, closing stock. Then maybe sale of scrap material, rental incomes, recovery of bad debts. Normally any organization may be having all these things. Then typical expenses, indirect expenses might be salaries, bonus, statutory payments, then sales commission, director remuneration in the company, personal expenses of directors, foreign travel expenses of directors, advertisement expenses of the companies, then preliminary expenses in case of the organizations, rental expenses paid, then insurance premium paid on stock, then power and fuel expenses, then interest expenses, dividend payments to the shareholders, then depreciation. So this is the normal companies line items. Now what is the chapter name? Items of financial statement. What are the items? Whatever we discussed so far is the items. Now auditor has to ensure each and every item to be verified by the auditor. While verifying each and every item, auditor can apply standard number 530 audit sampling. He can go for random sampling method, he can go for stratified sampling method, he can go for the systematic sampling methods, he can go for the block sampling methods, he can go for the haphazard sampling methods. Yes or no? He can go for the monitor unit sampling methods also. But auditor should verify all the items. He cannot ignore any item. Why he cannot ignore? If he ignore any item, there may be a possibility for material misstatement. Then who is responsible? Auditor is responsible. You should plan the audit of financial statement in such a way that all the items will be covered. Then if we come to the balance sheet, typically common transactions, common line items in case of companies, again it should be in schedule 3 format. For understanding classroom discussion purpose, we are giving in the T format only. Property, buildings, furniture and fixtures, vehicles, office equipments, goodwill and intangible assets, investments of the companies, trade receivables, inventories, cash or cash equivalents. What auditor has to verify? All auditor has to verify each and every item. In case of liability side of the balance sheet, auditor should ensure share capital, reserves and surplus, then liabilities towards the gratuity, statutory liabilities, bank ODs, term loan from the bank, sundry creditors, advances received, provision for income tax, expenses payable. What auditor should verify? All items auditor should verify. Here also all items auditor should verify. All the items. He cannot take any exemption here. If he verify all the items, then only he can issue a opinion on financial statements. Yes or no? No, these are the financial statements. These are the items of financial statements. So financial statements consist of 5 components. So from the 5 components, we are taking profit and loss and balance sheet transact items, and profit and loss items we have discussed the line items what might be, and balance sheet line items we discussed. And let us go for examination question. We'll take a break and we'll continue the class. Now let us continue with the one of the important question for examination, factors which increase or decrease in gross profit. So what is the result of trading and trading account? Result of trading account is a gross profit or gross loss. Yes or no? Now, when the management has decided to manipulate the books of accounts, when the management has decided to alter the books of accounts in order to increase the gross profit, how they can do it, how they can achieve it is the subject matter of discussion. So, in the question number 2, we given the reasons for increase or decrease of the gross profit. It's very easy to understand. If you look at the profit and trading account, debit, credit. So what are the items in trading account? Opening stock, purchases, direct expenses, the credit side, closing stock, sales. The result is gross profit. Yes or no? Now, if the management had decided to go for increase of this gross profit, how they can increase the gross profit? Is nothing but, if I increase the closing stock, what will happen? Gross profit also will increase. If I increase the fictitious sales, what will happen? Gross profit will increase. And in opposite direction, if you reduce the opening stock, what will happen? Profit will increase. If we don't record the purchases, automatically gross profit will go up. If I don't show the direct expenses, and instead of showing direct expenses, if I show indirect expenses, what is going to happen? Gross profit will go up. Yes or no? So, we know the reasons for increase of the gross profit. What are the reasons? Undervaluation of opening stock. See the symbols. Undervaluation of opening stock. Overvaluation of closing stock. Yes or no? So, this language you should remember for the examination. Then, alteration of basis of valuation of the stock. So, I may be following one method of valuation earlier year. Now, this year I may follow different method. Intention of the management is what? Increase the gross profit. Then, wrong inclusion in the stock. Example, stock is already sold, but you are still included in the closing stock. When the stock is increased, automatically gross profit also will increase. Then wrong allocation of expenses. What is wrong allocation of expenses? Direct expenses I am allocating as the indirect expenses, when automatically gross profit will go up. Then no provision or under provision in the expenses account including trading account. So there may be a fire happen in the company, they are not recognizing any provision in the company, automatically gross profit will increase. Now whatever we discussed so far, if we reverse it, automatically the reasons for decrease of gross profit will we can learn. Shall we proceed? Now these are the reasons for increase and decrease of the gross profit. Market is important for examination. Then another important point, point number 3. So before going for the direct questions, first we are learning the basic points. So first we learnt about financial statements, meaning, then what are the items in the financial statements, then we learnt about reasons for increase and decrease in gross profit. Now point number 3, already we discussed in the morning session, again repetition of point. Audit involves examination of the entity's financial statements and accompanying disclosures. So financial statements, how the management is going to prepare? They are going to prepare the financial statements, they are going to present the financial statements, they are going to disclose the financial statements. So who has to prepare? Prepare as per accounting standards. How to present? Present as per schedule number 3. How to disclose? Disclose as per accounting standards. Now, who is responsible to prepare the financial statements? Management is responsible to prepare the financial statements. When I say management is responsible to prepare the financial statement, who is not responsible to prepare the financial statements? Auditor is not responsible to prepare the financial statements. Now, point number 4, very important for examination. What is the point? Assertion. What is the point? Assertion. So, in order to understand this assertion, now let us take an example. Who is responsible to prepare the financial statements? Management responsible to prepare the financial statements. Let us take an example. In the balance sheet, there is plant and machinery. Plant and machinery, 100 crores. Who is responsible to prepare the financial statements? Management responsible to prepare the financial statements. Now, this is example of the balance sheet. Who prepared the balance sheet? Management only prepared the balance sheet. Now, tell me, my dear friends, from this particular plant and machinery, 100 crore rupees, what management is trying to tell to the public? What is management trying to tell to the users? Very good. That means management is trying to tell the following points from this particular transaction. First one, ownership. So, we are the owner of the plant and machinery, hence we have shown in the balance sheet. Second point, usage. We are using this plant and machinery only for business purpose, hence we have shown in the balance sheet. Management is trying to tell all these things, but they may not write everything on the face of the balance sheet. Wherever required, they may give in the notes to accounts. Yes or no? No. Third point, the valuation of the plant and machinery is 100 crores. Fourth point, the plant and machinery is really existed now. If auditor want, they can check. Yes or no? So, fifth point, we have recorded complete plant and machinery, we have not omitted anything. Yes or no? So, we have completely recorded plant and machinery, we have not omitted anything. If you have any doubts, please ask me, we will give the explanation, information, clarification. Now, this is what management is trying to tell regarding this plant and machinery. Now, whatever management is trying to explain to the public is called as assertion, which means implicit, explicit representations made by the management. Implicit, explicit representations made by the management. Very important for examination. Market is important for exam. Now, we have taken the balance sheet. In the balance sheet, there is a plant and machinery worth of 100 crores. We are discussing about something called assertion. So, to understand this assertion, we have taken example. So, example is showing a plant and machinery of 100 crores. Now, who prepared the financial statement means management prepared the financial statements. Now, what management trying to represent from this plant and machinery? Management trying to represent from plant and machinery. They are the owners and they used it for a business purpose. The value of the plant and machinery 100 crores. It is really existed in the company. If anybody want to verify, you can verify. And we have completely recorded the transaction. We have not omitted anything. And one more point they have to tell. 31st March, up to 31st March, we recorded the transaction. Any plant and machinery bought after 31st March, we have not recorded. That means some of the points are showing explicitly 100 crores value, and some of the points 31st March on the face on the balance sheet it is shown explicitly, and it is existed means implied. If anybody want to verify, they can verify. Shall we proceed? Now, like this, the assertions are applicable to What is the meaning of assertion? Implicit, explicit representation made by the management regarding the financial statements. So assertions applicable to both profit and loss and balance sheet. Both profit and loss and balance sheet. Now let us see the example. Now let us see the main content. Now these are the assertions. It refers to representations by the management. It may be explicit or implicit. Explicit or implicit. Shall we proceed? Who is going to represent it? Management is going to represent it. How they are going to represent? Explicit or implicit. Shall we proceed? Now in preparing the financial statements, management may make implicit, explicit representations, means claims regarding the following transactions. So the assertion applicable to balance sheet, assertion applicable to profit and loss account or income statement also. Shall we proceed? Now what are the assertions, what the management trying to tell? Regarding the balance sheet transactions, they are trying to tell all transactions we have completely recorded, which means what? 100% recorded, not omitted anything. Regarding profit and loss account items also, all 100% items have been recorded. Who are trying to tell this point? Management. If anybody have doubt, if auditor has a doubt, what auditor can do? Verify the documents. Shall we proceed? Now in this particular financial year, we recorded transactions up to 31st March only, both balance sheet transactions and profit and loss transactions. It is called as cut off. Who is trying to tell this? Management is trying to tell. If auditor have a doubt, auditor can verify. Then as far as the balance sheet items are concerned, all balance sheet items, whatever the assets have been shown, the assets are really existed as on 31st March. Physically available. If anybody want to verify, you can verify, no problem at all. Regarding profit and loss transactions, it is a one-time nature of expenses. There is no concept of existence, it is a concept of occurrence. Occurrence means what? It really happened in my company. We have a voucher, bill, everything. If you want to verify, you can verify. So regarding profit and loss account transactions, we call it as occurrence. Regarding balance sheet transaction, we call it as a existence. Who is trying to tell all these representations? Management is trying to tell the represent of all these transactions. So these are called as assertions. Then management is trying to tell whatever we shown in the balance sheet, all balance sheet items are valued properly. That means opening assets, addition of assets, deletion of assets, depreciation, closing balance of assets, opening balance of the loan, then liability side, then loan repaid, closing balance of loan, we valued correctly. If you want to verify, you reevaluate, no problem at all. Shall we proceed? Who is trying to tell this point? Management is trying to tell. That is called valuation. Regarding profit and loss transactions, there is no concept of valuation. There is a concept of measurement. Sir, whatever the expenses we measured properly, we measured accurately. Hence measurement. So balance sheet, whatever the assets I have shown, I have all the rights on the assets. What are the liabilities I have shown? I am agreeing, I am liable to pay all the liabilities. It is an obligation of the company. Shall we proceed? So regarding profit and loss account, there is no concept of rights and obligations because there is no assets, there is no liabilities in the profit and loss statement. Shall we proceed? Whatever presented in the profit and loss and whatever presented in the balance sheet, all are presented as per the schedule 3. If you want, you can verify. Who is trying to tell? Management is trying to tell. So this is called as assertion. It is called as assertion. Shall we? So assertion means what? Implicit and explicit representations by the management in the financial statements. Broadly, financial statements are balance sheet and profit and loss. So balance sheet assertions are what? All transactions completely recorded. same applicable to profit and loss also. Then cut off, same applicable to profit and loss also. In case of balance sheet, the assets are existed. In case of profit and loss, the transactions are occurred. In case of balance sheet, all are valued properly. Here it is measured properly. In case of balance sheet, assets are my rights, liabilities are my obligations, not applicable in the case of the profit and loss statement. Then all the transactions are presented, disclosed as per the schedule 3. Here also I am presented, disclosed as per schedule 3. Shall we proceed? Examination question they may ask. Now one more example is given. Now see here. Company balance sheet showing building with a carrying amount of 50 lakh rupees. Company balance sheet showing, what is the value? 50 lakhs. What management trying to tell about this 50 lakh rupees and building? What is the management trying to tell? First point, it is existed because it is asset. Now where it is existed? Come, I will show, no problem. If auditor is asking, so where is the building? Yes, I will show the building. Please come to my place. Then company owns this. That means I have a right over the building. Then third one, it has been accurately and measured. It has been valued accurately. That means valuation concept. How to value the building? Opening balance plus purchase of additional buildings, less deletions, less depreciation, then automatically closing balance will come. Then it is properly classified, disclosed in the financial statements. Then the value of the building 50 lakh rupees I have completely recorded. I have not omitted anything. So these are the points management trying to tell implicitly, explicitly to the auditor. If auditor want to verify, he can verify. Shall we proceed? Now this based on these assertions, the entire chapter will now run. Now management may tell some of the points explicitly, some of the points are implied. Auditor has to understand on his own based on his professional judgment. Shall we? Example, rent paid. What it means? Rent paid up to 31st March only. Rent paid amount recorded completely. Rent paid amount correctly measured. Rent paid amount properly classified as the revenue expenses. I have disclosed properly. That is the meaning of the rent paid. Yes or no? Shall we proceed? No. Now one more examination question. Along with the financial statements, company has to prepare the following ratios and they should disclose in the notes to accounts. It is the responsibility of every company to prepare the following ratios and mandatorily disclose in the financial statements. So what are the ratios? Current ratio they have to prepare and disclose. Debt equity ratio they have to prepare and disclose. Debt service coverage ratio they have to prepare and disclose. Return on equity prepare and disclose. Inventory turnover ratio they have to prepare and disclose. Trade receivable turnover ratio, trade payable turnover ratio, capital turnover ratio, net profit ratio, return on capital employed, return on investment. So all these ratios company has to prepare based on the audited financial statements and they have to disclose on the notes to accounts. So one time it is tested for the exam. What are the ratios company has to mandatorily prepare? Example, if you are taking any company annual report consists of what? Board of Director report plus financial statements. What financials? Audited financial statements plus audit report. We call it as annual report. Now this is what the examination question. While preparing the ratios, how many ratios? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. How many ratios? 11 ratios. Now the question tested for exam is, when you prepare the ratios, If you compare with the previous year, last year ratio, current year ratios, last year 11 ratios, current year also 11 ratios. So when you compare, you are going to get what? Variance. What is the meaning of variance? Difference. Now the examination question is, the company shall explain the items included in the numerator and denominator also for computing the above ratios. Further, explanation shall be provided for any change in the ratio more than 25% compared with the previous year. MCQ based question, also tested for the case based questions. When management is responsible to give the explanation, difference is more than 25%. If difference is less than 25% or is equal to 25%, then no need to give the explanation for the difference. Otherwise, management has to give explanation where? Notes to accounts only. Shall we? So when the management responsible to give the explanation, when the difference is more than 25% compared with which year? Previous financial year. How many ratios they have to prepare? 11 ratios. Shall we? This is examination question. Now let us come to the main questions for exam. All the questions you should remember 2 points here. All audit of items of financial statements have very good weightage in examination. So 12 to 15% of the marks. So what you should remember for entire chapter, for entire audit of items of financial statements, you should remember 2 points. So I'll write down here. So remember, number 1, methods of obtaining evidences. That is 7 methods of obtaining evidences. Second point, what you should remember, assertions. When you are attempting the balance sheet item, you need to prepare the balance sheet assertions. When you are attempting the profit and loss account item in examination, you need to remember the profit and loss assertions. What are the common assertions for both? Completeness, cutoff, presentation and disclosure. Now what auditor has to ensure? Auditor should check whether the complete transactions are recorded or not. Like that you should write in examination. Okay. Auditor should check that whether the cutoff procedures have been maintained by the management or not. Okay. Auditor should ensure that whether it has been properly presented and disclosed as per the accounting standards or not. Clear? Then what are the specific assertions regarding balance sheet? Existence, valuation. Yes or no? Assets should be existed, properly valued. What is the specific relating to profit and loss account? Measurement, occurrence. And here rights and obligations. Now what auditor has to check? Auditor should check the ownership documents of the assets to ensure what? Rights and obligations. If it is a loan, what auditor has to ensure? Whether loan is in the name of the company or not, auditor should check. Whether loan has been used for the business purpose or not, auditor should check. Yes or no? Shall we proceed? Now 7 points to be remembered. auditor should do inquiry, auditor should inspect the documents and books, auditor should observe, auditor should recalculate the amount shown in the financial statements, auditor should re-perform the stock verification or re-perform the physical stock verification or assets verification. Then auditor should send the external confirmations. Then auditor should apply analytical procedures. Means what? Comparisons. If you remember these 7 methods of audit evidence, obtaining audit evidence and assertions, then it is easy for you to write any question relating to audit of items of financial statements in examination. Shall we proceed? Now let us check one question, examination question. So after reading examination question, come back to these points and check all these 3 points. So one is methods of obtaining audit evidence, second one is assertion. So if all are satisfied, audit is completed. If auditor don't do this, then it is a professional misconduct. In examination also you can apply like this only. Now let us see the one question for examination. Now examination question: how will you watch or verify the borrowings from banks? How will you watch and verify the borrowings from banks? Now how to answer? Remember 7 methods of obtaining audit evidence: inquiry, inspection, recalculation, re-performance, observation, then external confirmation, analytical procedures. Then remember about the assertions. It is a balance sheet item, right? So what are the assertions in balance sheet item? Completeness, cut-off, valuation, existence, rights and obligations, presentation, disclosure. Shall we proceed? Now tell me what kind of points we can write in examination. First point, external confirmation. Write a letter to the banker whether really bank loan is in the name of the company or not. Please confirm. Shall we? This is the logical understanding of subject. Don't mug up any question. Logical understanding of subject. You write normally in examination, you will get the marks. Shall we? No. Second point, obtain independent balance confirmation of the banks showing the balances of the security deposited with the bank security for the loans and the charge created on the assets, and confirm that the same has been correctly disclosed in the financial statements. That means for taking a loan, what kind of asset is given as a security? What is the meaning of charge? Giving or registration of the asset as a security in the favor of the banker is called charge. I have taken loan, right? Now what auditor has to check? I have taken a loan balance is increased. How I got the loan? I may be given some asset, or by taking this loan I may be bought some other asset of the particular company. So both should match, right? Auditor should ensure the respective asset which has been created as a charge. Third one, verify the authority under which the loan or draft has been raised. What it means? What it means? Inspection of documents. Why you are inspecting documents? I am inspecting documents because I have a doubt. Who has given the power to get the loan from bank? Yes or no? Confirm, in case of a company, the restraints contained in section 180 of the Companies Act regarding maximum amount of loan that the company can raise or has not been contravened, because there is one section Companies Act 180, how much loan they can maximum obtain from the banks, whether this has been properly complied or not. So what I am going to do? External confirmation is from outsiders. This is compliance of the law. What I will do now? Tell me 7 methods. Which is better appropriate method? They are asking confirm in the case of the company that the restraints, that means restrictions contained in section 180 of the Companies Act regards maximum amount of loan that the company can raise is not been contravened. Enquiry. Ask the management. Sir, what is the maximum amount given in 180? This is the amount given. How much loan you have taken? Give me both the records. I will check. What is the board resolution you have passed? I am going to inquire with the management now. Next. Ascertain the purpose for which the loan has been raised and the manner which is being utilized and that has been prejudicially affecting the entity. Also, CARO is applicable for this particular point. Now they are asking for what? Analytical procedures. What analytical procedures? What I am going to do with this? Again, inspection only. I am going to inspect the documents. I am going to inspect for which you have spent the amount. Give me the bills. Give me the vouchers. Give me the contracts you have entered. What is the loan purpose you have taken? For what purpose you have spent? Give me the both the document. I will inspect. I will check. Why I am inspecting? I want to know whether it has been spent for business purpose or not. Shall we? Now, one line summary of entire discussion. What auditor has to do? Reconcile, that means do recalculation of the transactions, go for the confirmation of balances, then check the inspect the documents authority, then check the maximum loan rules. Shall we? Now this is how you should apply the concept in examination. Now let us go for the, so another question for examination. How will you verify the goods sent on consignment basis? What is the meaning of consignment? That is a consignor and consignee. Let us see the meaning of the consignment. Goods on consignment basis means goods that are sent by the principal to his agent to be sold at a principal's risk. The person who consigns the goods is called consignor, and one to whom the goods have been consigned is called consignee. How many parties are there? 2 parties. Who are the parties? Consignor and consignee. Now they are asking us to write on what point? Goods sent on consignment basis. So goods have been sent. To whom I have sent? To my agent I have sent. For what purpose? To sell on behalf of the consignor. Who is going to take the risk? Consignor. Where they have written all these points? Consignment agreement. Yes or no? Now auditor has to check the following areas. Check the consignment sale book. What is going to be happen in the consignment? What they are going to record in the consignment sale book? Consignment sales. Then account sales. What is the meaning of account sales? Consignee will send every month or every quarter or every weekly or every 10 days once. So these are the products I have sold, sir. So please take the account sale. Please give me commission, sir. So what is the evidence for account? What is the evidence for consignment sales? Account sales is the evidence. Then sale price of the goods sold to be verified by auditor. What is the why is sales price to be verified? Because I am sending the goods to the consignee at a specified price. Consignee has to sell the goods at that price only. Where the price is recorded? Consignment agreement. Now auditor has to ensure sale price of the goods sold and expense incurred by the consignee should be verified from the account sales. In the account sales they may be recorded. Quantity sold, rate per unit, total value, everything may be recorded. Why you will record everything? 2 purposes. One purpose is to calculate his own commission. Okay. Second purpose is to know the closing stock. Ensure that the difference between the cost and invoice price has been credited to consignment. So we are preparing separate set of books for the consignment accounts. So cost price and invoice price to be shown separately in the consignment accounts for tracking purpose. Whether this has been maintained or not, auditor should ensure. Now verify the consignment agreement. Why? How much commission is to be payable to the consignee? Because he is my agent, he is selling goods as per my instructions, and I am held responsible for the entire goods, and whatever the sales he has made, I am not giving any salary, I am giving commission. More sales, more commission. No sale, no commission concept. So you paid more commission, that means there must be more sales. How much percentage of commission you have paid? Auditor has to check the consignment agreement. Then quantity reconciliation. Why quantity reconciliation? How much of the goods I have sold to the that means transferred to the consignee, how much goods he has sold, how many stock lying with the consignee. I need to check the closing stock of the particular goods. So if auditor do all this, confirmation of balance. Why confirmation of balance? So stock might be held with the consignee. Yes or no? So how much stock held with the consignee? I don't go and verify, because I will get confirmation letter from the consignee. Consignee is not internal party, is external party. Then no profit is booked on the consignment, goods remaining in the hands of consignee. Why no profit should be booked? It is my closing stock only. Yes or no? If you verify all these documents, it means auditor has obtained sufficient appropriate audit evidence. So always remember, sufficient appropriate audit evidence. Now what are the documents verified for consignment sales? Consignment, sale book, account sale. Account sale, who will prepare and who will receive? Consignee will prepare and send to consignor. Sale price of the goods sold, auditor should verify. Cost invoice price, auditor should verify. Consignment agreement, auditor should verify. Consignment agreement? To know the commission. Quantity reconciliation, auditor should do. Confirmation from consignee. Why? To know the stock. Closing stock valuation. Shall we? Now another important question for examination, how will you verify the foreign travel expenses? What travel? Foreign. Who will go to the foreign? Management will go to the foreign. Why? Business purpose only, not for personal purpose. Okay, when they will go to the foreign country? Who will approve? Who will approve? Example, one employee of the company moving to foreign country for a business. Who will approve that employee? Top level management. Yes or no? While approving, what are the conditions they may keep? Foreign travel expenses limit they may keep. Yes or no? Number of days trip they may keep. How many persons allowed they may keep. Yes or no? In which hotel you have to land they may keep. All the rules and regulations. Otherwise what the employee will do? He will land in all rich hotels. Who are the loser? Company is the loser. So this is called as internal control system regulating to foreign travel expenses. Whenever company frame any rules, we call it as what? Internal controls. Whenever company frame any rules, we call it as internal controls. Relating to foreign travel expenses, what auditor should verify? So where they may be recorded foreign travel expenses? Profit and loss account, balance sheet. Where the foreign travel expenses will be recorded? Profit and loss account, debit side, credit side. Why debit side? It is a expenses. Yes or no? How auditor will identify these? Take the profit and loss statement, check the expenses, debit side, that is a foreign travel expenses. Shall we proceed? The moment my employee landed in the other country, I need to spend for all expenses in other currency only, right? Yes or no? How to get other currency? How to get other currency? Go to the airport, give the Indian currency, exchange and get the currency. What should I pay? Commission I should pay. If it is one time, okay, I will pay. Every week and every month, every 6 months once my team is going, then what I will do? I will get RBI permission regarding foreign travel expenses, regarding the currency exchange. Instead of going to the agent or currency brokers, I will directly get from the banker with a less commission. So that auditor should ensure. Now let us see. Verify the all travels has been authorized by the competent authority. What is it? What it means? Inspection of documents. Then the auditor should examine directors travel rules framed by the organization. What it means? Internal control system. Then the copies of tickets should be examined. Why copies of tickets should be examined? Sufficient appropriate evidence. Shall we proceed? Then examine whether the travel expenses such as boarding and lodging, daily allowance, conveyance expenses have been claimed as per the rules. What it means? Foreign travel policy of the company. Who has to check all these things? Auditor has to check all these things, because now you are doing audit. At the time of audit, you seen some foreign travel expenses. Then immediately you are going to ask, sir, give me tickets, I want to verify. Okay, ticket amount 5 lakh rupees. Why only 5 lakhs? Why not 2 lakhs? So there is a rules regarding this. So give me the rules. Verify the maximum limit of the tickets. How many persons allowed? 1 person, but ticket is for 2 persons. Why you are 2 persons gone? No, so director wife also gone to foreign. We will repay that amount. No, after auditor is inquiring, you are repaying. Yes or no? Now continue. As regards the travel expenses claimed by director, the auditor should satisfy himself. That means satisfy means what? Sufficient appropriate evidence auditor should get, and these are incurred by them in the interest of business. That means what? Foreign travel expenses must be spent for business purpose only, not for personal purpose. If you are spent for personal purpose, don't debit it to profit and loss account. Yes or no? Debit to director account. Recover from the director. Shall we? Now, unless the articles of association specifically provides the foreign travel payment has been authorized by the resolution of the shareholders, directors are not entitled to charge travel expenses for the attending board meetings. So regarding board meetings, articles of association should authorize the board. So board of directors decided to go for foreign for board meeting. Who has to approve? Articles of association, there must be a clause. So auditor should inspect the articles of association now. Verify whether RBI permission. Why RBI permission? Foreign currency limits. Every month the RBI has given $500, but you are spending $1,000. You are violating RBI rules and regulations. I need to apply standard number 250. Consideration of laws and regulations. What is the laws and regulations? There may be statutory laws, there may be regulatory authorities. RBI is the regulatory authority. So I need to check this limit. Then for a company, the amount of foreign exchange spent is disclosed separately in the accounts. So as far as company is concerned, all foreign travel expenses rate variation should be disclosed separately as per accounting standard number 11. Because how to company has to prepare, present, disclose. Yes or no? As per what? Accounting standards plus schedule number 3. So one of the accounting standard applicable to foreign travel expenses is what? Accounting standard number 11. How to score more marks in auditing paper? Quote accounting standards, quote standards auditing, quote CARO clauses also. You will get more marks. So wherever required, that's why I am quoting all the standard numbers. Now finally compare SA'520. The amount of foreign travel expenses with the previous year figures. Any abnormal changes, ask for the reasons for abnormal changes. What is the meaning of obtain the reasons? Enquire with the management. What is the meaning of inquiry? For abnormal reasons, why the amount have been increased? So flight tickets have been increased, sir, we can't do anything. They may give the reply. If you are satisfied, no problem. If you don't satisfy, then I am going to write a remark. We will recover if you have spent excess amount. Shall we proceed? Easy or difficult? Now key points for revision. What auditor should check? Authorization. Then internal control system. Then physical documents. Then payment rules. Then he has to check the purpose. Then in case of the board of director meeting, authorization of articles of association. Then for foreign currency exchange, RBI permission. Then what the management has to do? Separate disclosure. Who told? AS 11. Then what auditor has to do? Apply 520. What is 520? Analytical procedure. What is analytical procedures? Compare with the previous year. Now, capital subsidy. Company engaged in some activities. They got the subsidy from the government. Capital subsidy. What subsidy? Capital subsidy. Why subsidy will be given by government? For a specific purpose. For a specific purpose. For which you should be eligible also. Yes or no? The company must be eligible and company has to spend the amount for the specific purpose. Then only government will give the subsidy. Yes or no? Now, in case of subsidy, what auditor should check? First of all, purpose should be checked. Second point, give me all documents relating to subsidy. I will check all documents. Why I should check the documents? Why you got subsidy? And for that purpose only you should spend subsidy, right? I want to check the conditions. And it is given by the government. Whether accounting standard number 12 is applied or not, I want to check. Right? Now, if it is given for any setting of the factory or setting of the any asset like that, I will check that also. And I will check the accounting pattern. How you are given the journal entries in the books of accounts. Beyond that, nothing is required regarding this point. Now let us revise. What you should check? Purpose. Then what should you check? Documents. Then what should you check? Purpose of subsidy, specific or general. That means any construction of building like that. Then what should you check? Entries, journal entries. Then compliance with accounting standard number 12. What is accounting standard number 12? Accounting for government grants. Who has given subsidy? Government has given subsidy. So which accounting standard I should apply? AS 12 I should apply. Whether management has applied AS 12 or not, I am going to check. Who has to follow accounting standards? Management has to follow accounting standards. Who has to ensure that management has followed accounting standards? I will do my job. If you check all these three points, so it is over. So we will go for next important question for examination. Advertisement expenses. So what are the assertions relating to advertisement expenses? Tell me assertions. Tell me assertions. Very good. So first point is completeness. That means what? 100% transactions I have recorded. Then tell me another assertion. Cut off up to 31st March only I have recorded transactions. Then measurement. That means whatever the amount I have shown correctly. Then it is really occurred. Then presentation disclosure. I have presented and disclosed as per the accounting standards. Now regarding this I am going to check all documents. Shall we proceed? And I am going to check the all documents ensuring with the accounting standards also. So there is one of the accounting standard is accounting standard number 1. What is accounting standard number 1? Disclosure of accounting policy. What is accounting policy? Any policy decided for your organization is called accounting policy, but it should be followed consistently based on your business environment. But you should not violate the accounting standard rules. The policy decided, example, I want to follow depreciation policy. You follow depreciation. There are so many policies for depreciation. Weighted average method is there, diminishing balance method is there, sum of digits method is there. You follow whatever the method, but follow consistently. Don't change the policy unless otherwise required by law or for better presentation of financial statements. Now I am going to check advertisement expenses. Shall we proceed? First, classification of advertisement expenses. Whether the expenses spent for long term, capital expenses. That means I am constructing the 10 years construction project like a Polavaram project in Andhra Pradesh, right? Whatever the expense I made for the Polavaram project is the revenue or capital expenses? All capital expenses only, because I not yet started any revenue activity here. When the company started generating revenue activity, then automatically advertisement expense will become revenue expenses. Now auditor has to classify it properly. Whether management has been properly classified or not, auditor has to check. Whether the revenue expenses or deferred revenue expenses. Deferred revenue means the benefit may be passed on to 2-3 years. Then expense also should be passed on to 2-3 years. So this is for long term. This is for 1 year. This is for 2 to 3 years. But it's revenue only, but passed on to 2 to 3 years. Shall we? Example, there is a construction of the building is going on. It will take 3 years. It will take 3 years. So they made advertisement regarding this. So there may be accounting policy in their organization. Because we are going to complete the project in 3 years, we will first year we will show 33%, second year we will show 33%, third year we will show 33%. Or else they may give the treatment that, oh no, we don't want to treat it as deferred revenue, we can give it as a capital expenses. We will add it to the project cost, but it is a accounting policy. Second point, advertisement expense must belongs to business. You cannot show personal advertisement expenses in the company books of accounts. Third one, what you should check? Documentary evidences. Example, paper advertisement. Take the papers, collect the papers from the management and check whether advertisement has been really displayed or not. Yes or no? No, sir, it is not a paper advertisement, it is a TV advertisement. Write a letter to TV channel and ask them to give the recording of particular advertisement displayed. They will give. Give us our radio advertisement. Write a letter to radio advertisement people. They will give the confirmation. But ultimately I want receipts. Then compare. Why compare? What is the amount estimated? What is the amount actual spent? What is the difference you got? Abnormal difference. Give me explanation, reasons, clarification, evidences. Then only I am going to satisfy. Next. Use a regular contract. Example, GRT jewelries. Every day there might be ad in the TV channel. So every day ad might be going on for 365 days. It is not for 1 day. So they will enter into agreement copy. So in case of the regular activities, get the agreement copy with the advertisement agency. Then verify tax has been deducted at source or not. Because it is a contract, 194C, TDS rates is applicable. Auditor should apply standard number 250. What is 250? Consideration of laws and regulations in audit of financial statements. I have to consider 250 standard. I need to follow Income Tax Act also. Whether TDS have been deducted or not, please let me know. I will check. Whether remitted properly to the government, whether TDS returns have been properly filed or not, I will check. Then outstanding expenses shown in the balance sheet are not as a liability. I am liable to pay the outstanding expenses to the advertisement agency. It is my liability. Auditor should ensure whether the liability has been properly calculated or not. What auditor should check? Recalculation of liability. Then copies of advertisements, they appear in the newspaper or magazines. Get the copies. Why? I need sufficient documentary evidences. Tomorrow there may not be a real advertisement, but he may book the advertisement, he remitted all TDS, everything, but ad is not displayed. It is a fabricated expenses. So unless auditor is very cautious, there may be a possibility for audit risk. Shall we proceed? Now let us revise. What auditor had to check? Nature. What is the nature means? Capital or revenue or deferred revenue. Then it should be related to business. Then evidence for payment. Then compare. Why compare? difference, SEP'24 standard you need to apply. Then contract you should verify. Then in case of contract, automatically TDS compliances. Outstanding advertisement expenses shown as liability or not, you please check. Check the advertisement in where? Old newspaper, media, recorded version. Ask them, they will give. If auditor verified all these things, what it means? Sufficient and appropriate evidence is achieved. That means he got the information. If auditor is unable to get this information, then he may go for modified opinion. Yes or no? Regarding the scrap sales, market is important for examination. Scrap sales. What sale? Scrap sale. That means there is a manufacturing company. So manufacturing company, so it is going to input the raw materials into the machinery. So because of these raw materials, there may be a possibility that some of the raw materials may be rejected by the machinery. Next, good quality materials only will, there is a lot of materials here. So some are rejected, some of the materials has gone to next level. So again there is some are rejected. Then other materials has gone to the next level. Again rejected. Then it has gone to next level. Then automatically good quality materials are coming here. Now we are discussing about this scrap, this scrap, this scrap. So in the organization, scrap has been generated by the company. What they are going to do? Scrap will be sold in the market. At what rate? There is no rate for the scrap. That is the biggest problem. That is the biggest fraud here. Okay. Whenever you are having a doubt regarding the rate, what you are going to do immediately? Compare with the previous year. Sir, no sir, there is a lot of volatility in the rates, sir, every year. Go for another year, average it. Yes or no? When there is a volatile rates, what you will do? Go for average basis. When you get average, take 3 years data and average it. 2 years data cannot be averaged. Yes or no? Now let us see regarding how much scrap should be generated by the machinery. My company, my machinery, my scrap. Company wanted to generate more scrap or less scrap? Why less scrap? I want to generate good quality materials. Then when the company want to generate less scrap, it may be inserted some rules. Yes or no? That is called as what? Auditor should check what? Internal control system. Then auditor should check what? Scrap records. To know how much scrap is generated. Then auditor should check percentage of scrap. Then auditor should check, compare the percentage with the previous year. Last year how much scrap generated, before that year how much scrap is generated, current year how much scrap is generated. If all are at reasonable intervals, in reasonable amounts, I don't ask any questions. If there is abnormal variation, then auditor may ask questions to the management. Then what is the production of scrap and generation of this scrap in the company? Then income from this scrap. How income will be calculated? Quantity into rate. Now what is my problem? Rate is my problem. So rate of scrap should be verified. Right? Now billing and calculation of invoices. To whom you are selling the scrap? The buyer of the scrap is a related party or outside party. I want to verify. If related party means you may sell the scrap at a very lower rate, but company is the loser here. I don't agree for that. Next, scrap materials versus good quality materials. Do we have a control to segregate it? There is a possibility in the last stage. Good quality materials are produced. They may mix in the scrap materials. Who are the losers? Company is the loser. So hence auditor should check whether there is a proper controls are there or not in the company. So regarding scrap, auditor should verify all these points. Market is important for examination. Trade receivables. Trade receivables means what? Debtors. Yes or no? So how to verify debtors? Already we discussed. Send confirmation of, examine the documents first. All these point talks about documents. What document? You verify the sales register, verify the cash register, verify the sales invoices, then verify the cash counter files, checks received, check deposited, you will get the amount. Then what you should do? Whether amount is correct or not. I have done recalculation so far. I want to confirm the balance also. Then what you will do? Send the confirmation to the debtors. What is the standard number? 505. I may send the positive confirmation or I may send the negative confirmation. Now I got the reply from debtor. What should I do now? Compare. Analytical procedures. Then whether disclosures have been properly made or not, auditor should check. Regarding debtors, how many points? Only 4 points. What are the points? Check the all audit evidences. What audit evidences? Sufficient appropriate audit evidences. That means all records, vouchers, entries, checks, bill books, then cash book, then checks presented in the banks, everything. Then check the confirmation of balances. Then check the comparison with the previous year. Then check the disclosures in the balance sheet. If you check all these points, debtors feel completed. Now creditors also same points, because creditors also outside party. Yes or no? So check the confirmation of balance, check the purchase register. So check the payments made to creditors. Any outstanding balance is there, you are not paid the amount for last 3 years. Why you are not paid? Any related party transactions, auditor should check. So schedule of the creditors, because there may be 1000 creditors. What you will do now? Take the schedule. Schedule means what? List of creditors. Then take the purchase ledger. Why purchase ledger? Because it is a creditors, means I am going to get the goods from the creditors. Then check the discounts. If you make the prompt payment to the creditor, they will give the discount. Then check any hire purchase transactions are there. Checks goods inwards book. Why inwards book? When the purchases are made from the creditors, automatically it will not go to the godown. You need to enter in the inward register at the gate. Lorry is entering into the company. They will make the entry, they will give the slip, everything permission, then only lorry will go into the company. Then communicate directly with the creditor. How? Write a confirmation letter, standard number 505. Then reasons for non-payment for a long time. Why you are not making a payment to creditor? Is it a related party? So if it is not making any payment, means already you booked expenditure. Yes or no? Already you paid less tax to government. Already you have shown low profit because of the higher purchases. You are not making any payment, which means it is your deemed income. If management is given explanation, there is no problem. But why you are not making payment for long period? Then disclose the requirement relating to creditors. So inventory, standard number 501. We will discuss in tomorrow class, because it is separate standard 501. So regarding investments, so what are documents used to verify investments? See, there is a one investment company. They are making lot of investments. They are investing in mutual funds, they invest in shares, they invest in properties, they will buy the properties, they will give on rent basis, everything. For that company, you are an auditor. How will you verify the investments? The balance sheet is having lot of investments. Now we are going to verify the investments. Very good. Confirmations. Let me check. Let me answer. Schedule of securities and shares. What is the meaning schedule? List of shares what you have bought. Then purchases sold during the year. How many shares have been purchased? How many have been sold? Then authority, who authorized you to make these transactions? Then classification. How to classify? Go and read accounting standard number 13. Investment accounts. What are the types of investments there? Current and long term. Please understand, in examination, don't write like a short term and long term. You will get 0 mark. It is not short term, it is a current and long term. Then valuation of investments. Current investments should be valued at what? lower of cost or net realizable value, whichever is lower. That inspect the documents. Inspect the documents. What documents? Investment documents. Ask them share certificates, mutual fund receipts, fixed deposit receipts. They will give all documents. Inspect the documents to check the genuinity of the investments. Then check the provisions of the Schedule 3. What is Schedule 3 provisions? Presentation, disclosure, preparation. Then ascertain the market value of investments. Then disclosure of investments. Then compliance with the accounting number 13 and CARO. Why accounting number 13? Because management has to follow accounting number 13 for investment accounting. Who has to prepare the books of accounts? Management. Who has to follow the accounting standards? Management. Auditor should check whether they followed or not. So the key points are as follows. Regarding investments, auditor should ensure the following points. Schedule of securities, that means list of securities. During the year, what is the purchase and sale of securities? Then authorization to make investments. Who authorized you to make the investments? That means internal control systems. Physical inspection of documents. Classification of investments versus long term versus current investments. Valuation of investments. Then verify the investment certificates. Then in case of the nominees, so audit in case of trust or NGO. You are doing NGO or trust, then there may be a nominees. So who given the nomination forms. If the person died, automatically investments come to your account. So how you got the investments? Maybe you may be purchased or maybe by way of inheritance, by way of nomination form. Your concerned person may be died. Automatically, if your example, your forefather is there, he wrote some nomination on your name. Automatically, when he has passed away, it will come to your name. Whether that is the procedure to get the investments or not, audit should check. Compliance with the provisions of Schedule number 3. Then check the market value, check the disclosures, then check the accounting number 13. Now we discussed about the assertions, right? Assertions. Now they given one examination question and they are asking what kind of assertion it is. Now tell me the assertions. Year-end verification. Year-end verification. They are given year-end verification. We have how many assertions? We have completeness assertion, cut-off, valuation or measurement, then rights and obligations, then existence or occurrence, presentation, disclosure. 6 assertions we have in case of balance sheet, 5 in case of profit and loss statement. Now tell me, they given the transaction, you tell me what kind of assertion is going to apply here. You are required to name the assertion for the following audit procedures. Now auditor is applying year-end verification. Year-end verification, year-end, end, cut off. Because year ending. Then depreciation has been properly charged on all assets. What kind of audit procedure? What is the name of the assertion for this? Depreciation has been properly charged on all assets. That means opening balance plus addition minus deletion, depreciation, valuation, everything. Then asset measurement will come in profit and loss account. It is the asset. Yes or no? Now you can take 2 options here. Depreciation is a profit and loss account item. Yes or no? Asset is a balance sheet item. So you can write valuation, and regarding depreciation you can write measurement, but valuation is the right answer. Because depreciation is coming out of what? Asset. So next, title deeds of the land. So auditor is verifying title deeds. Means what? What is the assertion of the company? Rights and obligations. All liabilities are all properly recorded in the books of accounts. All means what? All completeness, 100% recorded. Yes or no? Then related party transactions are shown properly. Presentation, disclosure. These are the examination questions. Now regarding year-end verification, I say suggestion answers given existence assertion because inventory they have taken existence. So we given the answer cut off, but they given year-end verification process. So existence is the assertion here. Then depreciation, valuation, why not measurement? Because depreciation is coming out of the asset. Hence it is valuation of the assets. Because of the valuation of asset only depreciation is coming into profit and loss. Then title deeds means rights and obligations of the companies. Then all liabilities means 100% recorded. Then related party shown means disclosure. So this is the examination question tested. So there is another 2-3 questions as given for your understanding purpose. So you can please go through with those questions. So tomorrow class we will discuss about the rest of the areas. We go for the new chapter tomorrow. So tomorrow class we will discuss about this teaming and lading concept. Please let me know this important for examination. Teaming and lading. Okay. Then market is important for examination. Then we will discuss about SA'501 in tomorrow class. Inventory verification. Thank you. We will meet in next class.